characterize us as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. More anguish ahead. The Fed hikes 75 basis points as Jay Powell signals a recession may be the price to pay for crushing rampant prices. Stocks swoon and yields jump. The Bank of Japan holds rates as the yen hits the weakest level in 24 years. Russia tensions add to the risk-off mood. Up next, the Bank of England, Bailey & Co. are set to deliver another half-point increase, the first back-to-back jumbo hikes in 30 years. At least 50 basis points is the expectation. Let's take a look at the futures then. Of course, there's a mixed view in terms of whether the BOE goes 50 basis points or 75 basis points. The futures looking lower by 1.6% on the BOE, of course. The traders now, markets now pricing in 5% in terms of rates, the terminal rate for the BOE by September of 2023. Currently, the FTSE 100 down by 0.4% as investors adjust to that hawkish message then from Jay Powell. Yes, we got the 75 basis points, but it was the message that growth is going to be lower, unemployment is going to tick up, and of course the dot plots, 4.4% by the end of this year, 4.6% next year, much higher than many economists and market participants had expected. So that hawkish message around the dot plots and, of course, that increase of 75 basis points. The CAC 40 now down by 1.7%. Over in Spain, losses of 114 points, down by 1.4%. Here in the UK, a drop of 1% just in the first few seconds. So pressure across these equity markets, again, as we look at yields rising. And the two-year stateside, you can see that now comfortably above that 4% level. So levels that we haven't seen since around 2007 on the US two-year. So the selling across the bond market, particularly at the front end. That's a move higher in yields of 6 basis points. Future stateside looking to build on the losses of yesterday, down 0.7%. The pound below 113. These are levels we haven't seen since 1985. The BOE later today, yes, that debate around 50 or 75, but the mini budget as well from the new Chancellor Friday, that fiscal stimulus and support, but the inflationary pressures, particularly on the weaker pound, concerns about the UK budget and the ability to continue spending. 112 on sterling, $89 a barrel on Brent. That's a drop of a little under, just under 0.1%. So a little bit of pressure coming through on Brent as we square up again to those recessionary risks. Let's get over to Bloomberg's MLive managing editor, Mark Cudmore now. Mark, you are looking at the euro. It's the one currency I didn't mention. That as traders start to price in 3% from the ECB by June of next year.
Don't worry, Tom. I'm looking at euro sterling specifically. And it's important we look at that cross because I want to present a slightly bullish view in sterling, but not a broad view in sterling. I don't want to be bullish cable. It is specifically a bullish view in sterling versus the euro. So euro sterling has broken above its range in the last 19 months at a 19-month high this week, and many people say this is a breakthrough to a new range. We know how bearish the story is in the UK. We know all the problems we've got, and that's part of my argument for why I'm looking for selective opportunities to be a little bit bullish sterling. And this is a great candidate because it's not that the UK story is good, it's just that the pessimism in the UK is fully priced. And Liz Truss's measures on the energy side will help the Bank of England upgrade their growth forecast. It will help the Bank of England actually deliver hawkish hikes. Some people say because they're going to cut their inflation forecast, it won't be. But they're cutting inflation forecast because of technical reasons, because of fiscal measures that will support the consumer. So that gives them more reason to be hawkish today. So I think the Bank of England has 75 basis points, despite the fact there's been no indication of this before. And I think that'll be a hawkish surprise, and I think that might be the turning point for euro sterling that will come lower. However, I will say that there is very little sign of sterling optimism right now, as you outlined so well, Tom.
This is a brave call, Mark. I love it. Often with the brave calls. Currently 112 on sterling. Bloomberg MLive managing editor Mark Cardmore. Whether or not we are now fully priced in terms of the risks around the UK in sterling, and whether there's some more upside, or at least some upside, not more, there hasn't been any, some upsides for sterling in the days and weeks ahead. The Bank of England is set to raise interest rates today, as Mark was saying, and start selling assets built up during a decade-long stimulus program. It's an historic tightening of monetary policy designed to clamp down on soaring UK inflation. For more, we are joined by Bloomberg's Lizzie Burden. Lizzie, outside the BOE, of course, for us today, 50 or 75 basis points. What is the BOE going to be doing today?
Well, Tom, I have to say, economists are not as hawkish as Mark. They see only a half point. I say only a half point. It would be the biggest back-to-back increase since Black Wednesday 30 years ago. But the reason that economists only see a half point is because of all the weak economic data that's come out. And the Monetary Policy Committee, of course, has had time to digest that because this meeting was delayed because of the sad news of the Queen's passing. But it's also because they reckon that Liz Truss's energy bailout is going to soften the short-term blow of inflation. Now, you might see that reflected in the bank's inflation forecast. We're not due a formal one today, but officials could hint that they see inflation peaking lower than the 13% they had seen in October. But the flip side to the bailout and the tax cuts that you mentioned that we're expecting in the mini-budget tomorrow is that they could necessitate so much borrowing, an unsustainable amount, the Institute for Fiscal Studies suggests, that the Bank of England today puts the brakes on active quantitative tightening because, of course, officials have previously said they're not going to actively sell gilts in a time of market turmoil. The other thing that we're watching out for, Tom, today is that exchange of letters between the new Chancellor Kwasi Kwarteng and the Governor Andrew Bailey. Might give us a hint as to how the new government intends to review the Bank of England's remit.
Okay, Bloomberg's Lizzie Burden on the number of things to watch out for, not just the decision around 50 or 75 from the BOE later today. Thank you very much indeed. Just a redhead crossing the terminal. We've been watching, of course, Japan's central bank governor Kuroda, after not raising rates, that was not unexpected, commenting, of course, on the yield curve control policy as the yen crosses through 145. So pressure, that Japanese currency down more than 1%. The redhead is this. The BOJ's Kuroda saying there is no need to change guidance for 2 or 3 years. No need to change guidance for 2 or 3 years. We know, of course, there is going to be a new governor of the Bank of Japan in the months ahead. But that is the redhead crossing the terminal as we weigh up, of course, this significant divergence now between the Central Bank of Japan and the Fed and many other major central banks. Let's bring in Patrick Armstrong, CIO at Plurimi Wealth, on the back of this to get your analysis. And very pleased to say that Patrick's going to be staying with us for a couple of blocks to get some calls as well. But let's start with central banking action then, Patrick. And let's start with this redhead then from the Bank of Japan, and what it means for fund flows when you have this significant divergence between the BOJ committing, doubling down on this yield curve control and stimulus.
And an extended period.
And an extended period,
really
2 to 3
surprising.
years.
So I don't think that's viable. I don't see how they can cap interest rates at 0.25% when every other central bank in the world is doing 75, 100 basis point hikes and plan to be doing them throughout this year. So you're going to see the yen keep weakening. It's very clear short to be short yen right now, but I'm pairing that with a short 10-year Bank of Japan or a Japanese bond as well, because that 0.25% cap's not going to be tenable. You've got yen already importing inflation now with yen at 27-year lows. It's just not tenable. So at some point that'll break. It'll probably lead to yen rallying a little bit when it does break, but then I'll be hedged by being short the bonds. So it's an extreme policy. They do have inflation in Japan. They don't have deflation anymore. They don't have the high inflation everywhere else has, but inflation's already coming in.
Inflation is ticking up. Yeah, we were touching on that yesterday, above 2% now in terms of inflation in Japan. Let's bring it back to the BOE then. Your call. Is it 50, 75? And how concerned are you about the state of the UK economy?
Yeah, they're in a pretty terrible situation. I think they're going to do 75. That's the hike. That doesn't mean it's a relative loosening. If they do 50, that's a relative loosening versus everywhere else, and you've got 10% inflation. I don't think you want to create a lot of sterling weakness, which means importing inflation again. So currency is a big lever in controlling inflation, and if your currency is depreciating against all the other major currencies, you can't battle.
Well, it hasn't worked so far. 112 on sterling. Does 75 shore up the pound?
Well, it stops it plummeting, I think. So it just keeps it in line with what the ECB is doing, what the Fed's done yesterday. So you have to keep up with everyone else if you want to preserve your purchasing power, which is controlling inflation, if you don't want the pound plummeting. So I think it'll be 75. 50 wouldn't shock me. It is a pretty even split, I think, on how people will be voting. But because the currency is so weak and everyone else is doing 75, that's where my money is.
And the Fed, the dot plots, 4.4% by the end of this year, 4.6% next year. Does this put the bulls to the slaughter?
It's a pretty difficult environment. He was unequivocal in the meeting that he said we're going to get it down to 2%. The dots were higher than I expected them to be. I don't think the dots will be achieved because I think when unemployment does start rising, I think talking about it hypothetically is one thing. Hiking into higher unemployment, I think that'll be a little bit difficult for the Fed. So I think the Fed's committed totally to battle inflation, create unemployment. But when the unemployment does start to happen, I think they might start to change their tune.
That's when they really test their mettle, yes. and particularly the political pressure. Patrick Armstrong staying with us. We'll get more of his calls after the break. CIO at Plurimi Wealth. Okay, coming up, the Federal Reserve did give its clearest signal then, yet that it is willing to tolerate a recession, which we're discussing there with Patrick. We're going to discuss more on that next, and break down the views, what it means for positioning in this environment, and get some of Patrick's calls as well on some individual stocks. Stay with us. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
my colleagues and I are strongly committed to bringing inflation back down to our 2% goal. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And there will very likely be some softening of labor market conditions. What we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%. We've just moved, I think, probably into the very lowest level of what might be restrictive. We probably in the housing market have to go through a correction. The median for the year end suggests another 125 basis points in rate increases.
Fed Chair Jerome Powell, of course, speaking after the FOMC decision yesterday on the state of the US economy. Patrick Armstrong, Plurimi Wealth CIO, still with us. Patrick, how do the markets reprice then 4.6% next year? How much more downside is there for an S&P that's already dropped about 20% from its record highs in January?
So the S&P, I don't think valuation isn't the issue anymore. It's the earnings outlook. So I think the Fed is priced into the S&P 500. If you look to PEs on a trailing basis at 16 times earnings, that's at 20th percentile. So 80% of the time, the S&P has been more expensive than it is on earnings. On free cash flow yield, it's at 6.8%. And again, that's very attractive versus a long-term 4.8 average. The risk is the outlook. So you've got a Fed that's creating a recession, and earnings estimates are too optimistic. Earnings estimates haven't been revised lower for 2023 yet, and there's going to be a wave of profit misses, lower guidance. Analysts react to company guidance rather than forecast what the earnings are going to be. So I think that's going to be a headwind for equities. But there's attractively valued companies, there's good quality companies. Owning those, shorting the most expensive companies, I think is a good way to play out the rest of this year.
Do you want exposure to energy at this point? It was a Goldman Sachs big call at the front end of this year. There's demand out of China that hasn't come back, and yet, of course, all the ruptures around Europe, Russia.
You have to have energy if you're going to take any cyclical risk, because the biggest risk to the economy is energy prices. So you've got utility bills spiking up, killing off discretionary spending. So you want to own the companies that are creating the headwinds in the economy. And I think energy is a big part of that. They're incredibly cheap, massive free cash flows. And the boom bust you get in oil and gas always, energy companies haven't spent on finding and developing new oil reserves. Every single one of them, not just most, every company is buying back shares, paying dividends, and paying down debt. None of them are exploring for new production. So you're not going to have any supply response. Demand will be destroyed by what the Fed's doing and the global backdrop. But the strategic oil reserve is really being drawn down to multi-decade lows. China's economy will come back at some point once they get past zero COVID. No idea when that'll happen. But you've got a very tight market already. There's no excess capacity. OPEC could probably do 1.5 million barrels a day if they really maxed everything out. So I think you want to own cheap oil and gas companies because oil's going to stay, it's higher for longer. It was lower for longer on interest rates a few years ago. Now I think it's going to be higher for longer on oil and gas prices.
And here in Europe, the consensus almost is that you're going to be in a recession, and ECB officials might push back on that, but most economists will expect that you're in a recessionary environment. Talk to us about then how you position within Europe. And in your case, you've added some luxury stocks.
Yeah. So
what's the case for luxury in this?
So the recession's going to hurt the lowest end consumers who are on the below median incomes. If you're a high net worth and an affluent individual, the recession's going to pinch, but it's not going to really change your purchasing power. So I think companies like LVMH, they've got massive ability to defend profit margins because their profit margin's so high. Input prices, energy prices don't affect that. So we're attracted towards that consumer segment and companies with defendable profit margins in an inflationary environment.
Do you like the long end fixed income at this point?
I'm short everywhere. So I'm short 30-year treasuries, I'm short 20-year treasuries, I'm short Italian bonds, I'm short boons. So I love the front end. You've got a flat yield curve that you're getting compensated now for. You're getting 5% on investment-grade bonds that are 2-year duration in the United States and the United Kingdom. So I'm attracted to that. If inflation does persist and the Fed has to keep hiking and you get a higher interest rate environment with quantitative tightening, I do think the long end is still a bit dangerous, and I'm attracted to carry it.
You're attracted to carry it. You don't see a blowout in investment grade on these higher rates?
Definitely could happen, but if you're in the short duration stuff, it doesn't matter. Your spread duration's a year and a half, and that pull towards par just happens quite quickly. Every day that passes, the duration falls. So I'm happy to take credit risk, but with short duration.
I want to loop it back to the UK because it is a big day, of course, with the BOE coming up. Equities, of course, with that international exposure, predominantly the FTSE 100, has benefited. It's been a safe haven versus the FTSE 250, more domestic focused. Does that divergence continue? Do you want any exposure to UK equities?
Yeah, so if you own the healthcare companies, the oil and gas companies, the multinational companies with this dollar revenues, I think that's an incredible place to put money in sterling terms. We're short the property companies, so British Land Securities. You've got higher interest rate environment, which it's a toxic environment for them. It destroys their property values. You've got people working from home. There's more demand. There's more supply of office space than there is demand. And they're highly levered as well, so a higher interest rate environment kills their profitability too. So I think shorting commercial property stocks makes good sense in owning the multinationals.
Okay, from stocks back to FX, because we've got the Turkish lira weakening to a record low ahead of the rates decision from the Turkish Central Bank later today. The vulnerability, Turkey has its own idiosyncratic issues, of course, and its very unusual monetary policy reaction function. But the impact across EM of this record dollar positioning that we're seeing, the strength of the US dollar, the wrecking ball of the US dollar. How are you looking at EM?
I want to own commodity exporting EM bonds. I'm getting inflation-linked bonds from Brazil, South Africa, Mexico, and I'm getting inflation plus 2.5%, 3% on these bonds, so an equity-like risk premium to buy inflation-linked bonds. And it hedges me against the inflation. I like the oil and gas, as we've already talked about. So those kind of companies, if you do have higher commodity prices, their fiscal situation doesn't look so bad, and they can deal with the stronger dollar because they have the commodities that are priced in dollars.
Fantastic. Always love the granular calls there from Patrick Armstrong, reacting, of course, to the central bank action, but with some insightful calls on how to position in this market environment. Patrick Armstrong, Plurimi Wealth CIO. We talked about the Turkish lira, of course, falling to a record low ahead of that rates decision. We'll continue to watch that story as well. Let's get the Bloomberg Business Flash with Laura Wright. Laura.
Thanks, Tom. Credit Suisse is reported to be considering plans to resurrect a bad bank to hold risky assets as it seeks a turnaround from losses and scandals. According to the FT, the investment bank could be divided into three parts, comprising of the group's advisory business, a bad bank to hold high-risk assets that will be wound down, plus a third part containing the rest of the business. The Bank of Japan has stuck with its policy of ultra-low interest rates, further isolating itself from a global wave of tightening and pushing the yen to a fresh 24-year low. The governor, Kuroda, kept the BOJ's yield curve control program and asset purchases unchanged. As expected by economists, the currency briefly touched 145 against the dollar before paring back some of the lost ground. JP Morgan CEO Jamie Dimon has slammed cryptocurrencies again, calling the digital assets decentralized Ponzi schemes. Testifying in Congress, Dimon said stablecoins would not be problematic with proper legislation. JP Morgan is involved in using blockchain for financial services, such as its own JPM coin.
Yeah, I'm a major skeptic on crypto tokens, which you call currency, like Bitcoin. They are decentralized Ponzi schemes. And the notion that's good for anybody is unbelievable. So we sit here in this room and talk about a lot of things, but $2 billion has been lost. Every year, $30 billion of ransomware, AML, sex trafficking, stealing. It's dangerous.
Colombian President Gustavo Petro is blaming a plunge in the peso caused by U.S. rate hikes for soaring inflation. The former guerrilla fighter took office last month with consumer prices rising at the fastest pace in nearly a quarter of a century. In an exclusive interview, he said Colombia is attempting to mitigate the problem.
Obviously, hunger leads to despair, violence, etc., politics. But the first thing that we have to solve, state-wise in Colombia, is to settle in power, bring food and nutrients to where the population is hungry today.
That's the Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. Okay, coming up, Ukrainian President Volodymyr Zelensky calls on the global community to punish Russia further as he addresses world leaders by video at the UN General Assembly. We'll have more on that next. This is Bloomberg.
When the Fed makes its call.
A unanimous Fed raises the benchmark rate 75 basis points.
Bloomberg is there with live coverage.
We anticipate ongoing increases will be appropriate.
The market's responding to this, as you might expect.
And instant expert analysis.
Do we want this Fed to force a recession?
They're saying that forward guidance is dead. It is very not dead.
We keep being surprised at how durable inflation is.
The risk is skewed to doing too much.
They're choosing the lesser of two evils.
Nobody covers the Fed like Bloomberg, your global business authority.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a video address, Ukrainian President Volodymyr Zelensky has urged world leaders at the UN General Assembly to keep up the pressure on Russia. Earlier, US President Joe Biden took center stage to rally international support for Ukraine following Putin's military escalation. Joining me now is Bloomberg's Maria Today. Maria, a lot of condemnation then of Russia at the UN General Assembly, but mainly from Western leaders.
Yeah, and Tom, you know, it's the UN General Assembly, and it's a forum that at times, you know this very well, we question as reporters, as journalists, do they actually help to move the agenda, advance it? Is it just a PR show? But in this case, the particular thing about this week, I would say, is that you'd found all your Western leaders in the same place, in the same location, essentially with the same message, which is condemnation and unity when it comes to Russia. All of them agreed, from the United States to the French, the Germans, the UK, the head of the European Commission, saying this escalation will only cost more lives, and it means that the war will drag in for longer. You also alluded to the Ukrainian President, Volodymyr Zelensky. Of course, this is a video message. He cannot leave Ukraine, but his message was simple, clear, but it was efficient. The Ukrainian people have made their choice. They want to pivot away from being a satellite to Russia to now the West, and Russia by force will not be able to change the course of history. But the point is, what about countries like India, Turkey, which, by the way, facilitated a prisoner exchange last night between the two? Will they help, or will they still stay on the sidelines in some of the issues? And I think the reality is, from this Assembly General meeting, we did not get a lot of clarity on that front.
Okay, Bloomberg's Maria today on that Western response to the escalation by Russia and Vladimir Putin, of course, in Ukraine. And of course, we are continuing to monitor that story. Redhead crossing the terminal right now, the CEO of UniCredit, Orcel, has said that they will substantially upgrade their guidance in the third quarter. So substantially upgrading the guidance for the third quarter is the expectation from the CEO of UniCredit. We'll keep across that story, get more for you. Coming up, Super Thursday continues. Up next, the Swiss National Bank will bring it to you live. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. More anguish ahead. The Fed hikes 75 basis points as Jay Powell signals a recession may be the price to pay for crushing rampant prices. Stocks swoon and yields jump. The Bank of Japan holds rates as the yen hits the weakest level in 24 years. Russia tensions add to the risk-off mood. Up next, the Bank of England, Bailey & Co. are set to deliver another half-point increase, potentially 75 basis points. The debate is still being had. The first back-to-back jumbo hikes in 30 years. Before we get to the BOE, it is the Swiss National Bank, and they have raised the policy rate by 75 basis points to 0.5%. So 0.5% is where the benchmark is now. That is an increase of 75 basis points. There had been some disagreement amongst economists and market participants as to how far they would go, some disagreements and debate as to whether they go 50 or 75. They've done 75, and we are looking now at the Euro Swissy at 95. So there is a move there in terms of the currency reaction, of course, to the back of that. On the back of that news, the S&P raising the policy rate 75 basis points to 0.5, 0.5%. The estimates were that you would get a 50 basis point. Well, there have been some division whether you get 50 or 75. The move is 75 basis points from the S&P. Let's get some reaction then from our next guest, Dominic Schneider, UBS Global Head of Global Commodities and FX. Dominic, is this the appropriate response from the Swiss National Bank? 75 basis points.
Well, I think they could have done a little bit more. I think that's definitely to think about. I mean, first of all, they have less meetings than other central banks. That's number one. Two, they're always thought to be a little bit preemptive. You have an inflation here in Switzerland that is only around 3.4%. And I think if you want to keep that inflation low, you need to stay on the hawkish side. I think it's very clear in the FX market, if you don't keep up with the Fed, you're going to get punished. The good news, we have a good economic backdrop, look at the unemployment, the surpluses that we have. So I think that's all good, but it's a little bit on the disappointing side, I would say. Hawkishness would have helped.
Yeah, you're seeing the euro up against the Swissy on the back of this by currently about 0.7%. A couple of other lines crossing. The SNB sees inflation at 2% in the second quarter of 2025. So that's a longer term projection, of course. It sees quarterly inflation exceeding 2% through the third quarter of 2023. And they cannot exclude more rate hikes in the foreseeable future. So the SNB saying they cannot exclude more rate hikes in the foreseeable future. Do you think they're going to need, Dominic, to sell some of their FX holdings to support the franc going forward, given the concerns about imported inflation?
Well, definitely what they could do is manage the currency a little bit. I mean, at the end of the day, one of the key factors that inflation has been low, besides that we obviously have less dependency on fossil fuel in Switzerland, which Switzerland is more resilient, not immune, it's important, but resilient is our strength of the currency. So obviously managing here, the war chest is here to basically manage some of the potential weakness that could come in. I think that makes still the Swiss franc an attractive currency. Keep in mind, we still have a lot of uncertainty historically that has been playing in. You might have the central bank here in the market. And I like to repeat again, I think at one point the SNB will signal, look, we want to be on the hawkish side. It's not a need to, but we can because we want to be preemptive. I think that's the key message here. And I think once that message gets through, dollar Swiss basically should stabilize. And we should still see that kind of downtrend in euro Swiss, I think, towards, I would say, the 0.92 over the next coming months. So
we've got the BOE coming up next. Dominic, we've got the BOE decision, of course, midday UK time, sterling at 112. Do you think they can put a floor under the currency?
No, I'm not so sure about that. I mean, the different choices here. Obviously, you can come with 50. I think the signal here would be quite clear. Look what is priced in terms of forward looking into spring. I think they're about 300 basis points increase in rates. They look a little bit excessive. That would be clearly negative for the currency. If you err more towards 75, you give the message, you know, that's fine. So I think that maybe gives a little bit support, but we do have some challenges here. Still have a huge current account deficit. We have growth slowing down. I mean, looking at full next year, full contraction. And I think that entire mix with the current account contraction and still so far among all the central Bank of England, a little bit more cautious in the communication, where is neutral, etc. I think that still, at least from an investor perspective, is clearly a red flag. And wouldn't be surprised if we overshoot to the downside. So look at maybe 110 as the next stop.
110 is the next stop for the pound. So mark that one in your notebooks. Dominic Schneider, we're having a few technical issues, so we'll have to leave it there. But thank you for your reaction from UBS, of course, to that jumbo hike from the SNB and the call there on 110 for sterling as we gear up the BOE at midday. Coming up, South Africa's Minister of Public Enterprises and former Finance Minister Pravin Gordhan. We're going to speak to that minister from South Africa. That interview is next. Stay with us. This is Bloomberg.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open. 38 minutes into the European trading day. Losses of more than 1% across the European benchmark following that Fed's decision to raise rates by 75 basis points. The dot plots as well signaling a terminal rate of 4.6% next year. A lot of action within the FX markets, particularly after the SNB, the Swiss National Bank came out with a jumbo-sized hike, 75 basis points. Nonetheless, Swissy under pressure, down around 1%. Sterling also under pressure at 112. Euro dollar 98. The Bloomberg Dollar Index gaining 0.5%. Let's spread our wings somewhat and get over to what is happening in terms of geopolitics, specifically energy and the impacts, not here in Europe, but in the largest economy on the continent of Africa. South Africa, and the inflation there has decelerated for the first time since January, a slowdown that is unlikely to sway the central bank from delivering an unprecedented second consecutive 75 basis point hike in interest rates. More tightening remains on the cards because the central bank wants to keep inflation expectations anchored and alleviate pressure on the rand. We are now joined by South African Minister of Public Enterprises, Pravin Gordhan. Minister, thank you for joining us. I want to start with what's been happening the last few days in South Africa. As we confront here in Europe and the UK an energy crisis, so do the people of South Africa. And we saw power cuts over the weekend. Do you expect that to continue?
Well, good morning to you, Tom, and thank you very much for having us. What we expect is that the kind of crisis that we have experienced over the last 10 days, where we've had load shedding of a significant order, will decline by this weekend, and that in terms of the plans that we have, both the immediate and medium to long term, we will recover from that. We will have load shedding for a while in South Africa, perhaps at level 2, as we call it here, as the new investments in energy, particularly renewable energy, begins to kick in. So our plan is firstly to ensure that the current electricity utility, Eskom, continues to improve its performance, and a lot of effort is going into that. And hopefully sooner rather than later, that pays dividends. The second, which has been happening for the past few years and will accelerate, which is getting private investment into generation capacity. And we have a mechanism called bid windows in South Africa, and thousands of megawatts of renewables in the form of wind and solar have been committed to already by private sector investment. So that will accelerate as we go into next year, and that will provide quite a relief in terms of available megawatts to our system. And thirdly, in the immediate instance, we are also trying to procure short-term energy, which would assist us in the current crisis.
Okay, so that's a bit of a long-term view in terms of how to rewrite the ship for the utility Eskom and get the grid back on track. You talk about load shedding, though, so presumably then we can assume from that there will be businesses and the people of South Africa should brace for more blackouts in the days and weeks ahead, potentially.
But not of the order that we've seen in the recent past. And that's what we want to mitigate as much as possible. We understand the disruptions that this causes, as you see it in Europe and elsewhere, to businesses as well. And we want to mitigate that as much as we can.
Is there a risk of the grid collapsing? How much faith do you have?
No, there's no risk whatsoever. I think we have a great set of experts operating within Eskom and managing the grid. And the load shedding is exactly in place in terms of levels 1, 2, 3, 4, and so on, in order to prevent the grid from collapsing. And it will certainly not get to that point.
A lot of this is down to failing infrastructure, essentially. What is the government's plan to address the vulnerabilities in the energy infrastructure?
Well, we've had mishaps in terms of government decisions some 15, 20 years ago, when power stations should have been built in the early 2000s, and there was a decision at the time not to do that. And when the decision was made, it was made a bit too late. As a consequence, we have the shortage of supply that we have currently. There have been previous bouts of load shedding as well. And of course, you've seen it elsewhere in the world, in California, in Texas, and in parts of Europe today as well. So in our case, the existing coal-powered fleet is oldish, so to speak. There are some newer plants. We have a very reliable nuclear plant in Koeberg in the Western Cape. That's undergoing some kind of refurbishment, but that'll be back on track soon. And we get hydropower from Mozambique, which is very reliable as well. So the infrastructure, particularly in terms of the transmission grid, needs to be expanded, and massive investments need to take place there in order to connect new renewable investments in other parts of the country to the main grid. So those are new investments that will occur. We've got to sustain what we have at the moment and complement what we have with the new investments.
So that's in terms of the energy mix and those additional investments that are needed, as you say, significant investments. For the time being, do you have confidence in the leadership of Eskom? And for our viewers who don't know, this is the biggest utility company, or at least provides about 95% of energy for South Africa. Do you have confidence in their management, in the CEO of that company?
Well, to date, they've done the best they can, but I think we've got to keep under constant review whether the governance and the management capability is of the order which would help us to meet the current crisis. What we are doing at the moment is trying to encourage Eskom to recruit some of the more experienced people, and they've already done so to some extent, and will do more of it, in order to mentor the younger managers at power stations. And that will help us to complement the skills capacity that we require within Eskom today. But we are in a challenging environment, and in a challenging environment, we've got to be agile, we've got to be watchful, and make changes if those are necessary.
And you talked about the massive investment that's needed in the energy infrastructure in South Africa. Are you seeing an appetite from the private sector to invest and to build out with you? And what more could the public sector be doing? And indeed, is there an opportunity for multilateral banks to assist in this?
Well, all of that is happening. The private sector has shown a huge appetite. The mining sector, for example, has billions of rands already in place in order to build their own capabilities as far as renewable energy is concerned. Investment from the private sector together with the financial institutions has been taking place at quite a hectic pace over the last 4 years once we opened the gates. The same is happening from the multilateral institutions in terms particularly of helping us with the just energy transition. And that would involve loan to some extent, and significant amounts of grant is what we expect from the developed countries, some of which we saw committed during COP26. And we hope that as we go to COP27 in Egypt, more commitments will be made so that developing countries like South Africa and others on the African continent will have the financial resources to undertake the energy transition in view of the climate change challenges that we all face.
Okay, and Minister, before we let you go, and I want to draw on your experience as Finance Minister as well over a number of years for South Africa. What are you seeing in terms of FDI? When do you expect FDI, foreign direct investment, in your country to turn around as we weigh up these headwinds, whether it's the energy crisis or pressure on the rand?
I think we've had incremental investments already, and each year, apart from the COVID years, the President has convened an investment conference that has attracted, by next year, almost R1 trillion in foreign investment. And more of that will happen once we have energy security on the one hand. And there's a huge amount of interest as we go through other transitions. For example, the green hydrogen project, which South Africa is well placed to capitalize on, the building of electric vehicles, and the transition that auto manufacturers, which is a big part of South Africa's manufacturing industry, is a transition that they will undertake, and their investments, together with the government assistance and hopefully foreign assistance as well, will be another area that will bring in investments. We've seen some big buyouts by Middle Eastern companies, of a logistics company, for example, in recent times as well. So the appetite for investment in South Africa, given its very modern infrastructure, is quite high. And from within the country itself, there's a huge appetite for private and public cooperation into investments in infrastructure of a very significant order as well.
Okay, South African Minister for Public Enterprises, Pravin Gordhan, of course, former Finance Minister as well. Thank you very much for your time this morning. Okay, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Volodymyr Zelensky has urged world leaders to keep up the pressure on Russia, which he said was afraid of real negotiations. The Ukrainian leader spoke to the UN General Assembly via video link. Earlier, President Biden slammed Russia's actions in the war, saying it has shamelessly violated the core tenets of the UN Charter. In an exclusive interview, the Greek Prime Minister told us the war is not going well for President Putin.
We are all united in supporting Ukraine defend itself against what is an open act of aggression that violates all existing norms of international relations. And speaking as a Greek, but also as a European leader, we know what's at stake here.
The state of New York is suing Donald Trump and 3 of his children for allegedly inflating the value of his real estate company's assets. It follows a multi-year investigation into dealings by the former president and his family. Ivanka, Eric, and Donald Trump Jr. are also named. The former president called the lawsuit another witch hunt and said the attorney general should instead be tackling violent crime. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura Wright here in London, thank you. Coming up, Credit Suisse is reported to have drawn up plans to split its investment bank in 3. We get the latest on that story next. This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Happy Thursday, welcome back to the Open. 53 minutes into the European trading day. Pairing some of the heavier losses that we saw at the start of the session, the benchmark down 0.5%, but futures in the US turning positive now. S&P E-minis up 0.2% after the losses that we recorded, more than 1% yesterday on Wall Street after that 75 basis point rate increase, and the guidance, the dot plots pointing to a terminal rate of 4.6% next year. We also had the SNB, of course, the Swiss National Bank, coming out with a jumbo hike. A jumbo hike, not a jumble hike, a jumbo hike of 75 basis points. Talking of Switzerland, one of its biggest lenders, Credit Suisse, is reported to be considering plans to resurrect a bad bank to hold risky assets as it seeks a turnaround from losses and multiple scandals. According to the FT, the investment bank could also be divided into three parts. Joining us now is Miriam Balazul, Bloomberg's Swiss banking reporter. Miriam, what do we know about these plans?
So it's still unclear, but it would be divided into three different parts. So the advisory business would remain, which is, a strength for Credit Suisse. But they would also split and separate the risky assets, which the FT qualifies as the kind of bad bank. And the rest of the business would be also divided into a third category. And on the side, as you know, and we've reported before, they also have kicked off the sale of the securitized products business, which is, very profitable business for Credit Suisse, and it's already attracted interest from the likes of Apollo or BNP Paribas. And all of this is really to sort of avoid raising capital, really, for Credit Suisse.
Yeah, so we're talking about a significant restructuring, Miriam. Do we have any details about the time frame for when this is going to be implemented?
So it's still to be decided. However, the bank has said that they would unveil this whole new strategy by the end of October, when they have their third quarter result on the 27th of October. That's when we expect it to get a bit of an update and just a clearer vision of that new plan. And, this would be the second strategy update within the space of 11 months. So we're all very much looking forward to hearing the new plan.
Okay, well, we'll flesh out that plan. We expect and hope to have that plan fleshed out then at that announcement. Thank you, Miriam Balazul, Bloomberg's Swiss banking reporter, on the reports by the Financial Times that the bank is looking to split the business in three. Just checking in new markets before we let you go on a big, big day, of course, for central banks. You're seeing losses of around 0.6% across the benchmark. Some individual banking news coming through, some lines coming through from Deutsche Bank on expectations of momentum continuing. UniCredit as well, saying that they could be upgrading their forecast. That stock up more than 4%. But it is all really about the central banks. The Bank of England is out with its decision at midday UK time. Will they go 50? Will they go 75 and align themselves with the SNB and the Federal Reserve? We'll answer that question at midday. That is it for the European Market Open. Surveillance Early Edition up next. This is Bloomberg.
popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There is a possibility, certainly, that we would go to a certain level that we're confident in and stay there for a time. We're not at that level. Clearly, today we've just moved, I think, probably into the very lowest level of what might be restrictive. Certainly, in my view and in the view of the committee, there's a ways to go.
I don't think he would say that he's completely given up the idea that we could get out of this with at least something that's softish. They said the unemployment rate is only going to be 4.4%. I think that's still much too sanguine. I think it's probably going to go beyond 5%. So I think they're being a little cautious now in making their forecasts.
I think the dots are conveying the determination of the committee under Chair Powell's leadership to move policy into what they think of as a restrictive territory. The economic forecasts are obviously dependent also not just on policy, but a lot of other factors. But I do put a lot of weight on what the dots are trying to tell us right now.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. More anguish ahead. The Fed hikes 75 basis points as Jay Powell signals a recession may be the price to pay for crushing rampant prices. Stocks swoon and yields jump. The Bank of Japan holds rates as the yen hits the weakest level in 24 years. Russia tensions add to the risk-off mood. Up next, the Bank of England. Bailey & Co. are set to deliver another half-point increase, the first back-to-back jumbo hike in 30 years. It is an insanely busy day with rate decisions from central banks. We're just getting Norges Bank coming through, doing as expected, hiking 50 basis points. That means that their policy rate now stands at 2.25%. Recall the Norwegian Central Bank was one of the first to really start the rate hike cycle. So the pressure on them is less than others. But you can see the krone weakening at the moment versus the euro. This is the world we live in, where a 50 basis point hike is not enough to stem declines in currencies, considering the pressure that Powell and company has put on delivering big rate hikes and how that tightens financial conditions for everybody else. We also had something extremely similar when it came from the S&B as well. They also moved their policy rate above zero for the first time in almost 8 years, yet we saw a Swissy that is weakening. What you're looking at now is Central Bank Governor Thomas Jordan, at the S&B. We don't have English translations for you, so currently don't have exactly what he's saying. We'll monitor those headlines, but again, at the moment, what they are facing is other central banks, be it Riksbank that went 100 basis points, the Fed, which went 75. That means that what they're doing, look small in comparison. They did say, the S&P did say it can't rule out more interest rate hikes in the foreseeable future, but it is worth noting that by hiking their policy above zero for the first time in almost 8 years, this ends negative policy rates in Europe. So this is quite the consequential decision just from this big picture historical view. And of course, we're going to be speaking with S&P Governor Thomas Jordan and the Deutsche Bank Governor Ida Woldenbacher later in programming as well. So stay tuned for those. And of course, we'll keep you up to date on the moves. I also want to bring you some Deutsche Bank lines because we're also looking at Deutsche Bank share prices moving higher. Some positive noise coming from CFO James von Moltke, who says he sees this year's revenue, 2022, at the high end of the guided range. So you are looking at a Deutsche Bank at the moment. This is the year to date. This is the year to date. It is fallen. It is hurting. But this is something that might boost it. Also, von Moltke saying that they've taken some hit on leveraged loans. This is a problem we've been seeing throughout the liquid bond market. It is essentially seized up. Banks are pulling back. We will be talking to Silicon Valley Bank UK, so that will be interesting, again, to get their view. But I should just note we're looking at Deutsche Bank shares just pushing into the positive for today, up 0.6%. They're also saying as well, again, that 22 revenue, it'll be at the high end of the guided range. You're also seeing strong FIC performance in the third quarter. They're saying that there's some momentum in the private bank, in the corporate bank, some weakness in origination and advisory. Again, that has to do with deals slowing down, but also at the same time, no appetite for equities to return. That is, again, the risk environment we live in. Loans are seizing up. Equity deals are seizing up, but the whole picture of Deutsche Bank is a positive one because of the revenue coming in higher. So let me show you what the intraday looks like. Again, for Deutsche Bank, it started out the day negative, just moving into the green after these lines from von Moltke. At the moment, Deutsche Bank is up 0.7%. So let me get your view on the overall market so far this morning, because it is one of fleeing risk. It is one of continued digestion of Jay Powell saying that they will do what it takes. They will keep at it until the job is done, with echoes of Volcker in that. You're looking at S&P 500 futures, which have actually turned positive, up 0.3% despite falling into the close yesterday, down 1.7% yesterday, closing at more than 20% drop from the January high. Still, even so, you are looking at a 2-year yield, which is moving higher, higher by about 4.5 basis points. It is slightly, ever so slightly off the highs of today. At one point, it was at 4.1%, but still, that is a 2-year yield that is at its highest since 2007. It also means we're looking at a yield curve that is its most inverted since 2000. Euro, that's also moving more positive, but still, one thing that's not succeeding in getting any traction versus the dollar is the yen. At one point, is at 145. So yes, risk might be turning in the U.S. It is helping ever so slightly to lift European equities as well. We're down now just 0.6% on the benchmark. You can see it differs region by region. Banks are turning. It's helped in part by Deutsche Bank. We had some UniCredit news as well. So banks, one of the better performing sectors, but most sectors falling today. Again, it's the concern about risk. If we are getting global tightening, and tightening really reinforced by the Fed, do you want to be buying risk assets, especially given that lag in central bank policy? It might be some time before we truly understand the hit to corporate earnings it will take. So let's dig more into the Fed, of course, raising rates by 75 basis points and signaling even more aggressive hikes ahead than investors had expected. Jerome Powell warned that it's going to hurt, admitting that the chances of a soft landing are diminished. However, the FOMC remains committed to achieving its inflation target.
We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
Let's get straight to George Saravelos, head of FX strategy at Deutsche Bank, and one of the leading voices in trying to help us understand this environment of higher dollar over everything. George, I know you wrote last week that essentially the dollar play, the strong dollar play, is one where it's the only haven, it's the only harbor in this volatile world. But does an aggressive central bank, does an aggressive Fed that raises its dots to 4.6% average for next year put rates back in the driving seat?
Good morning, Danny. And I think the point you made earlier in the show about all these other central banks hiking rates, the Riksbank going 100 basis points, the S&B 75, Norway 50, and yet all the currencies weakening. I think that goes to the crux of what is going on in the market this year. The tightening we're seeing is relatively symmetric. If you look at interest rate differentials, they're not moving especially aggressively against the dollar, but the dollar is still making these huge gains this year. And I think it's all about the safe haven dynamic, where effectively dollar cash has proven the only hedge that has held its value, so to speak, for any international investor. So what we're seeing in the data is investors are selling US assets. For example, the Japanese are selling US bonds, but the big difference versus history is it's not being repatriated back into Japan. People are selling US assets, but they're keeping those proceeds in dollar cash. And I think that's the key driver behind dollar strength this year, this risk aversion.
Well, since you harken back to what I started saying on the show, I got to go back there because I do find this really interesting. You have the S&B hiking 50 basis points. It's expected. Swissy gets clobbered. I think it's down about 1% versus the euro and the dollar. You had the BOJ do again, as expected, hold rates. I mean, at this point, George, is there anything that these central banks outside of the Fed, anything that they can do to actually deliver something which can help elevate their currency in the face of a central bank that's resolved in hiking rates?
Well, there is. They can be hawkish. They can start talking about the importance of the currency. And for example, that's what the ECB has been doing. So it doesn't prevent the euro from weakening, but it prevents disorderly moves. And you can see European real rates have been rising. Some of these outflows from Europe that have been on the back of negative rates have stopped. So the euro is dropping, but it's dropping by less. Now, if you take Japan at the other extreme, there's not even an attempt to do that. In fact, I would argue the Bank of Japan is pursuing a purposeful policy of active yen derating, even though they're not admitting it. They're following essentially the policy advice of Ben Bernanke. He wrote this paper a few decades ago where he said, if you want to get inflation up in Japan, the only way to do so is to derate your currency. And that's what the Bank of Japan is doing, and the market is essentially following. The yen is down nearly twice as much as every other currency because the Bank of Japan is not supporting it. So it really depends on how willing and proactive a central bank is going to be, and that's why the Bank of England today, for example, is going to be very critical for the pound.
Yeah, George, we'll get into Bank of England in just a moment, so hold those thoughts. But when it comes to the yen, for those who are watching, taking sort of every bit of verbal intervention from BOJ, from all the policy officials there at potential intervention and hoping for that, are they just wrong-headed right now? Is it folly to believe that there will be any unilateral or more coordinated intervention in the yen?
So I'd make a few points. The first one is we had government officials come out right after the Bank of Japan meeting today saying they are supportive of the Bank of Japan's policy in terms of raising the price target. That is an implicit support of what the Bank of Japan is doing, and also an implicit recognition that essentially intervening to bring down dollar yen would go counter to the policy objective. So I think the odds of intervention are relatively low. We've had a lot of verbal intervention to try and prevent some one-way moves. But even if we do get that, it's highly unlikely it's going to be effective. Number one, because it's not going to be coordinated. It's very unlikely the US participates in an intervention to strengthen the currency, which its own central bank is actively derating. Plus, on the Japanese side, if you think about the mechanics, it would involve selling dollar reserves, selling US treasuries, which would then lead to higher US yields, which would push dollar yen higher as the Bank of Japan is injecting liquidity. So it's simply not credible.
Hey, Georgia, I just want to squeeze in one last dollar question before we go to break. Of course, you're sticking around with us, but I quickly want to get this in. You've written about this idea that the dollar's overshooting, valuation anchors are being challenged. But George, why should I care about what history tells me about the dollar in a world where we're witnessing a regime change and, as you put it, this geopolitical strife that's driving us to the dollar?
I think that's a great question, and it goes to the point that if you look at the dollar historically, it's clearly overvalued. But the loss of these valuation anchors because of historic events, the Bank of Japan balance sheet expansion is historic. The European energy crisis is historic. It makes it very difficult to calibrate and understand what fair value is at the moment. So the market is being driven by these safe haven effects. And I think you need to see a turn, for example, in the European energy risk premium or from the Bank of Japan to start even thinking about a turn in the dollar.
Yeah, and George, I got to say, people clearly not listening to you. As we've been speaking, we're looking at the yen absolutely go gangbusters against the dollar. It's now positive on the day versus the dollar, or at least unchanged. We're going to get Conda from the MOF speaking soon, so perhaps some people speculating intervention in the yen. All right, George, stick with us. Much more to cover. George Saravelis there, Global Head of FX Strategy at Deutsche Bank. Coming up, it's also BOE Day. We're going to preview the UK's central bank rate decision as pressure mounts to clamp down on inflation. More on that next. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by these flooding in the Amazon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. Some breaking lines coming through. Bank of Japan, MOF's Kanda saying they have intervened in FX markets, saying we have taken bold actions. FX moves have been sudden, one stop. Again, we don't know exactly what form the intervention has taken, but Kanda saying that they have intervened in markets. We are seeing a remarkable turnaround in the dollar yen. It was down more than 1%, the yen versus the dollar at 1 point today. Now dollar yen is down about 1/3 of 1%. Again, Kanda from the MOF in Japan saying that they have intervened in the FX market, saying that they will monitor with high sense of urgency, again, saying that they have taken bold action in markets. Let's get back to George Saravelis, Head of FX Strategy at Deutsche Bank. George, what are your first take on these lines coming from Kanda?
So I think it's clearly giving a signal that they're becoming a bit uncomfortable with how quickly things are moving. And as you mentioned, overnight, there were huge moves in dollar yen. But at the end of the day, I'm not convinced this is going to be effective. The first reason is it's not coordinated. You're not seeing a participation from the side of the US. And historically, it's only coordinated interventions that have proven more powerful. But the second and most crucial point is that then this is leading to contradictory policy within Japan. You have the central bank on the one side easing policy, injecting liquidity into the system, and the Ministry of Finance on the other side trying to remove liquidity and strengthen the yen. That's a policy inconsistency. I think as they're selling reserves, for example, you will then see the market think about the transmission channel, which is selling reserves implies selling US Treasuries and higher US yields, which push dollar yen higher. The point is there's a lot of internal contradiction here, and they will have to do very large amounts to have any sort of impact, which I suspect over time will be more limited once the initial positioning gets flushed out.
I mean, I do have to wonder what the top currency official, Masato Kanda, is speaking about here, because he says that they've taken bold action, that they've intervened. Earlier, he was talking about this idea of stealth intervention. George, you say it's not enough if it's just unilateral, but what sort of intervention do you actually expect that this has taken the shape of? What can they do at this point, again, without getting sort of coordinated intervention from the U.S., a G2 intervention?
Well, I think we're going to find out over the next few days in terms of the amounts. They're going to be officially released in a few weeks in terms of the size, and the market will take a guess. But again, the only thing that can be done is directly intervene in the spot market. It essentially implies selling some of their dollar reserves. They are large, it's around $1 trillion, but they would be selling into a policy combination for Japan that's still set up for yen weakness. So I'm not convinced it would be an efficient use of reserves or have a long-lasting impact.
But George, why talk about this at all? Why try to jawbone? Why try to do this type of intervention? Again, as you say, because the Bank of Japan can afford to have the inflation come in that a weaker currency affords them.
So the objective would be to just reduce and create some more two-way moves in the yen, reduce some of the long dollar yen speculative positioning that has been out there. So essentially just try and slow down the move. And I guess try and gain a bit of credibility given that they have been talking about it for almost 3 months now.
Yeah. And so at the point, just to keep everyone updated again, we heard from the MOF's Kanda talking about that they have intervened. We are looking at a yen that started out the day weaker after a BOJ decision that kept rates unchanged. At the moment, we are now looking at a stronger yen versus the dollar. It's gaining about 0.8% versus the dollar, trading at 142.93. Kanda also saying the government is highly concerned about excessive moves. So George, this goes to your point. It's about the pace of moves that is unsatisfactory to them. So if it's about the pace, George, and not necessarily the level, what is a level, or is there a level that we could more seriously consider the idea of G2 intervention?
I think we're still quite far away from that. And the reason is, if you think about US policy at the moment, the predominant objective of the Fed is to lower inflation. And one way of achieving that is via a stronger dollar. So to have the US intervene to weaken the dollar at the same time would be highly contradictory and would be undermining the Fed's objective function. If you look at the European side, again, to satisfy some of those conditions for intervention that are set out in the G20 finance minister statement, you need disorderly, highly volatile moves, which are not taking place. If you take a look at the euro, it is weakening, but it's fairly orderly without strong volatility. And at the same time, you have this deterioration in underlying fundamentals. So I think the bar for coordinated intervention in the manner of the Plaza Accord, for example, is still very, very high. And we're still quite some distance from that. And the fact that the Japanese are now intervening, but unilaterally, I think speaks to that point.
Yeah, fair enough. And we are continuing to see strength in the yen. Now it's dollar yen is down by about 1.1%, George. So do these gains, are you saying essentially that they're not sticking around, that this is just a gut punch reaction?
I would suspect that once the market has adjusted some of its positioning, it's unlikely these gains are sustained. And the key driver behind ultimately turning dollar yen will have to be the Bank of Japan shifting policy, as well as, of course, the Fed.
So our anchor out of Hong Kong, David Ingles, just lets me know, George, that this is the first time that they've intervened to prop up the currency since the late 1990s. So we've talked about it on the side of Japan, why they might not want a more coordinated intervention. They just want to, again, stem some of the declines, verbal intervention, what be it. But it's not just Japan, of course, George, that's struggling with it. We've been talking about it for the past 20 minutes. This is a problem throughout the globe of a stronger dollar. But from the angle of the Fed, from the angle of the U.S., Is there a point at which they would want to intervene? Because for them, of course, it helps to have the strong dollar to try to combat some of the inflationary pressures.
The short answer is no. I don't think the Fed would intervene. Of course, it would be on behalf of the Treasury because it's the Treasury's remit. But when you have Powell come out in the evening and say bringing down inflation is priority number one, it's simply not consistent with policy to try to weaken the dollar at the same time. The other point to make is that if you look at previous periods of dollar strength, historically, they've been associated with some source of financial or systemic instability, especially in emerging markets. But over the last 10 years, the world has deleveraged in terms of foreign borrowing in dollars. So even though we are seeing dollar strength, it's not a big source of financial stability risks, which would be one reason, for example, behind coordinated intervention.
So we are seeing some of the gains in the yen already start to back off, still stronger versus the dollar, 0.8%. George, can I put it in really stark terms? Have Japanese authorities lost their credibility with the Forex community?
I think what the market will be looking at over the next few days is the size of intervention, trying to back out how much was done. That will eventually be published. And it will be assessing how many sales of dollars did it take to create this move. And if that number is very high, the market will conclude that it really has a very high cost to try and push dollar yen lower. But my initial conclusion still stands. If you've got a central bank that's still essentially providing yen liquidity into the market, that's doing very large amounts of QE, intervening at the same time is very unlikely to work.
All right, George, I mean, a lot of drama going on with the yen, but I do just want to take a quick pause from that and move on to the BOE. I need to squeeze this in here because, of course, it's just a few hours to go until we get a decision from the BOE. George, what is it going to take in terms of them, just in a minute here, what is it going to take in terms of hikes for you to abandon your short on sterling?
So I think sterling's at a dangerous crossroads, but policy credibility is at risk of being lost. In fact, it already partially is. There is a risk of, for example, fiscal dominance if the Bank of England gives up on this plan of active gilt sales because of the anticipated issuance. So what do they need to do? Hike by at least 75 or 100 basis points, signal that they may do the same thing again in the next meeting, talk about fiscal easing creating more inflation in the medium term, and persist with this active plan of gilt sales rather than hinting that this may change because of higher fiscal issuance.
Okay, George, thank you so much. George Saravelos, their head of FX strategy at Deutsche Bank, helping us walk through the news of the BOJ, of the MOF in Japan, saying that they have intervened in the FX market. Coming up, more anguish ahead. Fed hike 75 basis points. We discuss it. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Japan intervenes in the FX market for the first time since 1998 to strengthen the yen as the yen's losses deepen. More anguish ahead. The Fed hikes 75 basis points as Jay Powell signals a recession may be the price to pay for crushing rampant prices. Up next, the Bank of England. Bailey & Co. are set to deliver another half-point increase, the first back-to-back jumbo hike in 30 years. Intervention in the FX market, that's the word from Japan's Kanda. A headline, a redhead coming through the terminal that sent the yen moving higher. It has been a whipsaw of a session for the yen. At first, the initial reaction to the BOJ holding pat on their policy was one where we first saw the yen rally. That quickly turned into yen weakness. Yet again, it is rallying. We're looking at a dollar-yen cross that's down nearly 1%. Again, Kanda saying that they have intervened in the FX market. They've taken bold actions in the market. We were just talking to George Cervelis over at Deutsche Bank, who said that this is a short-term solution to a long-term problem, more or less, that unless it's more coordinated intervention, something like G2 intervention, it's not going to move the needle. Also saying at the same time that that is extremely unlikely, that to some degree, Japan just wants to keep these moves from being too accelerated, but they can afford to let a yen weaken. Well, let's get straight to our guest for this half hour. It's Thomas Kosterg from Pictet Wealth Management, senior U.S. economist. And Thomas, I got to start here. We are looking at the yen moving. In the commercial break, I mean, you said, look, it's not moving that much. To be fair, it really isn't. It's still at 143.7. To what degree is Japan and really all of these other world central banks just beholden to an ever more aggressive Fed?
Right, and yeah, I mean, the intervention so far looks a bit mellow, and especially mellow as I think the elephant in the room is the, the monetary policy from Japan, which is still stuck with this yield curve control at the 10-year yield at, close to zero. And I think the pressure will grow on them, especially as the Fed is, still hawkish and they still intend to continue hiking interest rates. And, the Japanese currency is very much driven by differentials in interest rates between Japan and the US. And those differentials are not only huge, but they're growing.
Thomas, can I make the same argument that interest rate differentials are driving a lot of what we're seeing? I mean, I'm looking at a euro, which can't sustain any strength. I'm looking at sterling, which can't sustain any strength. Even a Swissy that's selling off today, despite an S&B that's finally gotten out of negative interest rates.
Right. I mean, for the euro, it's also, I think, a function of the energy situation and the growth profile. I think, Europe is going through a severe energy crisis. The numbers we get from, many observers regarding the German GDP are not good. We'll face a tough winter here in Europe. And I think the growth outlook is also weighing on the currency. And in Europe's case, it's not just a matter of interest rate differentials, because the European Central Bank is actually hiking interest rates quite aggressively, and will probably continue to hike interest rates. But the growth profile, and especially the energy situation, is really what's weighing on the euro right now.
Thomas, what do you think the odds are for a 1980s Plaza Accord type intervention in this market right now?
Right. So the strong dollar is definitely making things worse for the global economy. I think that we've not yet seen the full pain coming from the tighter financial conditions, from the energy crisis, but this pain will grow. And I think as the pain grows, there will be, I think, more calls to do something about the strong dollar. But I don't think we're there yet.
Okay, so we're not there yet, and we do see a continued flight to the dollar. I should say it is weaker now, given what we're seeing from the BOJ, but we're also looking at a stronger euro and a stronger sterling. But overall, the picture has been one of dollar strength, Thomas. It's been one where you get the Fed saying that they're going to get to 4.6% next year. At least that's what the dots say. But to you, does that sound like recession? Does that sound like they are engineering a recession for this U.S. economy to help get us back to 2% inflation?
Right. I mean, they're going to definitely undermine demand, and undermine demand quite in a big time. I mean, the U.S. economy is super sensitive to interest rates, to the mortgage rates, to the two-year interest yield, to the high-yield bond market as well. I mean, financial market interest rates are going up quite aggressively, and what you see from economic models is that those interest rates do actually dampen consumer demand and demand at large in the economy quite in a big manner. The only thing is that there are long lags with central bank policy, and we'll only see the full effect of that by towards year end. And I think that's the risk with the Fed. I think they continue to hike interest rates because they're looking backward, and they're seeing the employment market still quite resilient. But the employment market is a lagging indicator. It's not a leading indicator. And all the leading indicators are actually weakening quite significantly. So I'm a bit worried that the Fed may overdo it, yeah.
But the question was even asked to Jay Powell yesterday, Thomas, how do you know when you've gone too far? I gotta say, he didn't completely answer. He did say that they're continue to focus on inflation. So you say you're worried about it. You're worried that they go too far. How much of a probability are you placing on this idea that they do? Do you think that they're heading towards that it is very likely that the Fed just goes too far?
Right. I mean, the Fed is very backward-looking. The reaction function is very simple. They look at job growth. They look at core CPI. And so far, they're strong, and they're too strong in their taste. And if they continue to be strong, they continue to hike by 75 basis points. I still think they will soften in the coming weeks, so that's why I think they will modulate the rate hikes. But the problem is all the inertia of the past rate hikes that will continue to affect the economy. And I think that's where probably, what I would have highlighted to Jerome Powell probably yesterday is those long lags in monetary policy. We'll see the full effect of that, again, by December and January. And I think that's when I think the Fed could take a moment to pause and potentially stop, because the economic data could take a turn for the worse.
Okay, Thomas, thank you so much for joining us today. Thomas Kosterg, Senior U.S. Economist at Pictet Wealth Management. Let's get back to Japan, because Japan's top currency official, Masato Kondo, just confirmed that Japan has intervened in its FX market. Their remarks also follow Kuroda speaking earlier. The move in the currency has been immediate. It has been dominating the dollar move. You're now looking at a yen, which is strengthening versus the dollar more than 1%. It's picking up steam. Let's bring in Bloomberg's Paul Dobson more for this. So, Paul, again, we heard from Kondo saying that they've intervened in this market. But, of course, this is not a coordinated intervention. This is something much different. What type of intervention are we likely seeing from Japan at this moment?
Yeah, well, a noisy one at least, Danny. If you're going to do it like we was discussing earlier, make a splash. Tell everybody that you're doing it and have the biggest bang for your buck, so to speak. The Bank of Japan and the government officials are explicit in what the reasons for the intervention is. They're seeing the moves as one-sided. they're seeing the moves as speculative and too far and too fast. So this is a slap down against anything that is that aggressive, and it was a profound weakening that we saw earlier in the day after the BOJ interest rate decision. So, kind of like it's a one-sided move, the kind of thing that may slow things down, but is probably not going to be a kind of draw a line in the sand. That's it. We're never going beyond these levels at that point.
Fair enough. I mean, we are seeing strengthening in the yen. Again, as I say, more than 1%. It feels like it continues to pick up steam. I mean, these are traders who are concerned about intervention in the yen, or at least are very jittery to it. I mean, Paul, what do we know about positioning at this moment? Is this a market that's primed, that's expecting further intervention, or is the overwhelming opinion one of continuing to short the yen?
Well, I think kind of it's one of those things like a child trying to steal the cookies out of the jar or whatever, isn't it? Where the speculators want to keep on pushing the currency weaker now, but are going to come up against that opposition from the central bank if it goes too far. I think your right positioning was looking extended. The speculators were in there because they scented that kind of blood, the stronger dollar, the more aggressive Fed, and that kind of thing. And so this will cause some of the late to the game. People going long dollar yen to have to retrench some of those positions and cover again. So, maybe it's a good move from the BOJ to flush out some of that yen short interest, to at least slow things down and make people think twice before they go all in on that as their preferred way to express dollar strength as a theme.
But Paul, I just want to sort of emphasize perhaps the historic nature of this. We've, of course, seen Japan intervene to weaken the yen, but the last time they intervened to strengthen the yen was 1998. And we've seen some remarkable volatility today, from dollar yen up 1.8% to now down to 1.2. What do you make of how just volatile this market has been?
Yeah, volatile, yeah, is absolutely the play, not just for the yen, but for everything across FX markets, right? Just because of that dollar strength. We've seen key levels falling across the Asian markets, seeing the rupee pop straight through the 80 level, Korean won at the start of the day through that 1400 mark that they've been watching as well. So it's not just the yen, it's not an isolated thing. It is a volatile FX trading environment, which is brilliant if you're an FX trader, if you're somebody who enjoys looking at this volatility, who enjoys following these trends. It's been a great place. But kind of if you're a company, if you're a business that is trying to do, kind of like you set your business plan for the next 6 months, 12 months, and you're seeing the markets moving around this much or moving this rapidly in one direction or the other, it makes your business planning very difficult. It makes your operating environment uncomfortable, and that's probably one of the things the BOJ is thinking about when it steps in to try to alleviate and reduce some of those price swings.
Yeah, try to get that stability back into the market. All right, Paul, thanks so much. Paul Dobson there on the immediate reaction to Japan's intervention. Now, coming up, we're going to talk to the CEO of Silicon Valley Bank UK about challenges and opportunities facing tech startups and the massive growth in venture debt. More on that next. This is Bloomberg.
Cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. I would characterize this as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Yen continues to strengthen versus the dollar, with Conda from the MOF saying that they have intervened in the FX market, that they have taken decisive moves. Again, this is just unilateral intervention. It is not a coordinated one, but it has been enough to strengthen the yen. Dollar down nearly 2% versus the yen at this moment. Recall, the day started with the dollar as strong as 1.2% versus the yen. This is some remarkable volatility in the face of the first intervention to strengthen the yen since 1998. There will be a press conference. Suzuki Conda, they're going to be briefing press around 10:30 a.m. London time, so in about 45 minutes, so possibly more volatility to come in this market. All right, well, from the yen, let's turn to the overall business and lending environment. We've seen worries about a recession, rampant inflation, sparking industry-wide pain in the corporate debt market. It's caused some banks to close up shop, refraining from taking on more risk. But is venture capital funding facing the same freeze? Let's get to someone who knows this market extremely well and has been involved in its massive growth of venture debt. It's Aaron Platts, the CEO of Silicon Valley Bank UK. Aaron, thank you so much for joining. So, I mean, it has been an issue for private equity. A lot of them have struggled to get the financing because of banks. Is venture capital having the same issue?
So I think, well, firstly, thanks for having me. It's been a really interesting first 8 months of the year, coming off of record 2020 and 2021. And capital's still flowing, though definitely not at the outlier year that we saw in 2021. So looking at equity versus debt, two very different dynamics happening for fast growth, loss-making venture-backed businesses and private equity businesses. So while equity markets have tightened in the first 9 months of the year, from our perspective, we've never been busier from a lending side, whether that be helping these growth stage venture-backed businesses extend runway, working capital, acquisition finance. I think we're going to see a good amount of consolidation in this space in the next 6 to 12 months. And then private equity for these fast growth, high recurring revenue, profitable enterprise software has been hugely active as well.
I mean, the word that sticks out to me there is profitable. Sort of this idea of venture capital growth at any cost in a world where we're seeing everybody from the BOE to the S&B to the Fed raise interest rates. Is that model gone now?
I don't think it's gone. I think we're in the midst of a recalibration that's happening, and that in many ways isn't unhealthy. So to your point, from a macro perspective, rising interest rates, inflation, we've seen a massive challenge in public markets. That has absolutely trickled into the private markets as well, in terms of valuations, in terms of velocity and size of venture capital rounds. But innovation is pervasive, right? There's trillions of dollars sat on the sidelines from both a VC and a PE worlds that is time-bound. So you've got great innovation, you've got a growing innovation economy, and lots of money sat on the sidelines. So do we need to navigate the next 12, 18 months? Absolutely. Is it harder for companies to raise? For sure. But actually, for me, the long-term outlook still is really positive.
Well, of course, Silicon Valley Bank, I mean, it's in the name. Your roots are in the U.S. Coming to the U.K., looking at this market, how does its growth compare to that of the U.S.? Because the U.S., of course, is much more mature at this point.
Yeah, for sure. And it still is, right? So I moved over from the U.S. back in 2007 when the innovation economy was very, very different than it is today. The last 10 years, we've seen a massive increase in the breadth, depth, diversity of innovation being started and scaled here. The last 5 years have been tremendous. We've seen tons of tailwinds In 2021, actually, the UK and European venture ecosystem raised about $118 billion. And that was the size of the US venture economy in 2018. So the gap is narrowing. And while the US is bigger, it's more mature, we're absolutely seeing global category leaders being started and scaled within UK and Europe. And so again, a lot to contend with from a macro perspective, but a lot to be excited about.
What has the macro perspective, the volatility there meant for exits, meant for the IPO market when it comes to venture capital?
Yeah, I mean, to be direct, the IPO market is pretty much closed, right, for 2022. I don't necessarily see that opening anytime soon, given what's happening externally. So what that means is a lot of our companies are cautious, right? They're thinking about ways to extend runway to protect that cash position. But they're also coming back off these record years of raising capital. So they have really, really strong balance sheets. And they've got a playbook that they had to deploy in COVID around thinking about runway extension, around thinking about what levers they could pull around costs. And of course, going back to where we started, using debt, right, as to complement that equity story. So exit environment on the IPO side is going to be tough, but I do anticipate further M&A in the next 12 to 18 months as consolidation is going to be needed in the industry.
Okay, I feel like that's a nice optimistic note to end it on, Erin. Thanks so much for joining us. Erin Platts there, CEO of Silicon Valley Bank UK. Now, coming up, we're going to continue to discuss the yen. Just want to point out it continues to fall, currently down nearly 2% versus the dollar. We'll also talk about Zelensky as well, urging world leaders at the UN to keep pressure on Russia. Those stories next. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. In a video address, Ukrainian President Vladimir Zelensky urged world leaders at the UN General Assembly in New York to keep up the pressure on Russia. Earlier, U.S. President Joe Biden took center stage to rally international support for Ukraine following Putin's military escalation. Let's get straight to Bloomberg's Maria Tadeo. So, Maria, we've had world leaders reacting to Putin's comments on partial mobilization. What have we heard from them?
Yes, and Danny, to some extent, what an incredible week. You have the United Nations, the General Assembly, and I know oftentimes we wonder, forums like this, do they actually serve a purpose? Do they actually improve diplomatic relationships? But this particular edition, just the moment of it, you had all of the Western leaders in the same place, at the same time, same location. And of course, the messaging from it, it's not just the visuals, but it's the tone. You did get pretty much every Western leader saying this is a mistake from Vladimir Putin. He now has decided to increase the level of brutality in this war. And of course, it means, well, this is a real drama for young men in Russia. But of course, it means de facto that the length potentially and the magnitude of the conflict could be extended in time. When it comes to the nuclear threat made by Vladimir Putin yesterday, remember that line, I'm not bluffing, I will do all means necessary to protect Russia. What you did see here is some attempt to de-escalate. Every Western leader repeating, we have a doctrine in the West, you do not play politics with nuclear. There are no winners in a nuclear conflict. You have to be rigorous, but do not engage verbally on this matter.
Okay, Maria, thank you very much for the update. Bloomberg's Maria Tadeo there. All right, let's get back to the drama that is this currency market. Japan intervening according to the MOF there. And let's get straight to Christine Aquino, who is with us. So, Christine, I mean, I had a viewer write in saying essentially currencies are trading like meme stocks at this moment. Yen strengthening versus the dollar 1%. The S&B's Governor Jordan saying that they're willing to be in the market on the Swissy if needed. The Swissy is tumbling versus the dollar. I mean, are we in panic mode when it comes to central bank credibility right now?
Well, it certainly is a bit of a scramble for central bankers to kind of retain control, especially of the currency markets. And it's something that we're definitely seeing with the Bank of Japan today, as well as the S&B. It's very interesting, though, the contrast in the market reaction that we saw, because, of course, this intervention threat from the Bank of Japan has been in the market for quite some time. That is the reason why traders have been kind of daring the Bank of Japan to step into the market, pushing dollar yen up to that 145 level, which again proves to be the line in the sand and pushing the Bank of Japan into action. Though how much bang they're getting for their buck, exactly. I wonder, is the big question, right? Because we're really only a few big figures down from the peak in dollar yen at this point. We're not even below the early September levels at around 138. And so the question is how much more they're going to have to do from here. That is kind of the danger when you step into an intervention policy, is you risk turning that into a bit of a spiral.
Yeah, I mean, we were just talking to George Saravelis from Deutsche Bank about this. How much are they spending to get this done? 30 seconds here, Christine. What is the current sentiment around possible more G2, more sustained intervention?
Well, Danny, I think this does kick off a potential new era of threat of intervention, whether it's strengthening the currency or weakening the currency when it comes to the S&B. I think this will all come to a head, to a point where, you know, it either needs to get the dollar strength, really, which is ultimately behind all of this, to stop, or something that needs to be done in a more coordinated way to stop it.
All right, Christine, thanks so much. That's Bloomberg's market editor, Christine Aquino, keeping us up to date on a yen that's stronger versus the dollar, 1.4%. The market moves are dramatic. We'll have them for you in the next hour as well. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
We've been here before. The Fed goes through tightening spells and easing spells and pauses.
The Fed continues to be really focused on the emerging data.
The Fed has to do a lot more to get the economy where it wants to.
Chairman Powell has got one mission, that's to deal with inflation.
And certainly in my view and in the view of the committee, there's a ways to go.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The price of crushing inflation. Fed Chair Jerome Powell signals that a recession may be necessary. It's the Bank of England's turn next in the spotlight after the Swiss announced a 75 basis point hike. Meanwhile, the Japanese government intervenes in the foreign exchange market to prop up the yen as the Bank of Japan holds firm on ultra-low rates. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, just as you thought we were done with the Asia part of the day, the Japanese government intervening in FX markets, putting FX front and center for today's session.
Yeah, making FX and Japan specifically really the only story in Asia, Anna. It was a down day for Asian equities broadly following the losses we saw in the U.S. on the back of that hawkish Federal Reserve 75 basis point rate cut yesterday. And of course, as you said, the Bank of Japan holding rates steady, maintaining yield curve control and that 25 basis point cap on the 10-year JGB yield. They are keeping policy easy, and that had the Japanese yen reaching weakness against the U.S. dollar we hadn't seen going all the way back to 1998. We breached that 145 level, and that seems to be the line in the sand for Japanese policymakers, including the BOJ, because no sooner had we digested those headlines of 145 on dollar yen than we get the news that Japan has intervened directly in the currency market to stem the losses in the Japanese yen. It is the first time they have intervened to stop weakness in the yen since 1998, the height of the Asian currency crisis. And as a result, a dramatic reversal happening in dollar yen. If you are listening on radio, basically all you need to know is it is a straight line down on the chart. The yen now stronger against the dollar by about 1.3%. We're trading now at 142.17, Matt.
Yeah, and it's such a huge move and so important to markets because so many people have a Japanese yen carry trade or a JGB carry trade on. And this goes against that trade. Now, it wasn't entirely unexpected, but it's sure to wake a lot of people up early this morning and put a lot of stress in this market, even after we saw the stresses of a more hawkish Jerome Powell than the market expected yesterday. Take a look at futures right now. They are still up on the S&P about 1/3%. We have the 10-year also holding steady at about 353. This is, by the way, interesting because we saw the 2-year yield jump well over 4% and the inversion bump out to like 60 basis points yesterday. So be watching that closely. The Bloomberg US Dollar Index coming down on this Japanese yen intervention, though still at an incredibly elevated level of 13.19. So still holding at an almost record high, but this new move that we've seen from Japan, the first time, as Kaylee pointed out, that we've seen it in almost 25 years, is putting downward pressure on the dollar. And then finally, Bitcoin, still gaining, or gaining now, I should say, as the dollar drops back to over $19,000, 177 still. This is a currency that I think not a lot of people are going to be paying attention to today, even after Diamond's comments yesterday that crypto is a Ponzi scheme, because all eyes are really on the Japanese yen. Anna, what do you see in Europe?
Yeah, and Jamie Dimon said similar things, didn't he, Matt, in 2017? So back to the markets of today then. As you say, this is the picture in Europe, a fairly negative one, but we're still dealing with the Fed of yesterday. Seems like a long time ago now. But we saw negative stock reaction, of course, negative for risk assets from the Fed's more hawkish outlook than anticipated. And so European stocks having to price that in. Let's get to the FX markets here in Europe, because there's lots to talk about here as well. The Swiss National Bank out with a rate hike of 75 basis points. Now, that was entirely as had been expected, but we've seen weakness in the Swiss currency as a result. The SNB also said that they would be ready to act on the strength that they have seen in their currency. So they don't have the same problem as the BOJ directionally, but they certainly have been talking about doing something similar, at least the topic of intervention very live. And just in the last few moments, the SNB's Thomas Jordan talking about how they could act on both directions, and there's not a particular level they have in mind. But this is the movement we saw, the weakness that we saw in the Swiss franc as a result. Now, it's not the ECB that's intervening in FX markets. It's not the European governments, it's the Japanese governments that are doing it, but it's still having an impact here. Just as we saw that news around what the Japanese government is doing, and just as that strengthened the yen, it also strengthened the euro, strengthened the pound in sympathy. So the euro up by 0.4% as a result. Just to breathe, there are other stories happening in Europe as well that might be of interest to those with exposure of bank-to-bank stocks in the US. This is UniCredit, the Italian bank, the CEO there, saying they're going to be able to upgrade guidance for the third quarter. And this, of course, has to do with the higher rate environments as well. That stock is higher. And Deutsche Bank, a similar message from the CFO in this case, talking about the revenues, Kaylee, coming in at the top end of estimates.
All right, Anna, and we're going to have more on the banks in just a minute. First, though, let's take a look at the day ahead. We'll be getting some earnings, including from FedEx, which will report after the market close. Remember, we've already gotten a warning from them last week. We'll also be hearing from Costco, which reports its fourth quarter results. Plus, bank CEOs, including JP Morgan's Jamie Dimon and Bank of America's Brian Moynihan, will be appearing on Capitol Hill again today, this time before a Senate Banking Committee hearing. And in terms of other events to watch, U.S. data is on the agenda, including current account balance and initial jobless claims. And finally, the central bank rate decision, another one today. The Bank of England will be making its move at 7 a.m. New York time, Matt.
All right, we'll be watching all those things closely. Now, Japan's Ministry of Finance intervened in FX markets. We've been telling you to halt a slide in the yen against the dollar. That has taken the currency to its lowest level in 24 years. The slide initially, now the turnaround because of the intervention. Paul Dobson, Bloomberg Asia Markets Executive Editor, joins us now for more. Just explain to our viewers and our listeners, Paul, how important and how big this move is.
Yeah, it's certainly a significant development. You know, the Bank of Japan has been keeping that interest rate locked at a low level to try to spur the inflation that the Japanese economy needs to get out of this kind of 20 years of deflation or disinflation and economic kind of funk that it's been in. You know, but in order to do that, or while it's doing that, it's been, you know, kind of increasing its yield gap with the US all the time that the Fed has been hiking on the other side of it. And so that has been sucking money out of Japan and towards the US, right? And so, you know, enough is enough. The Bank of Japan had its meeting earlier today. The MOF watched the results, saw another big move. You know, it came out, it said, look, this is speculation. This is too fast, too rapid and one-sided. They moved to quickly slap down what was going on in the currency markets. And it's significant because it's a unilateral move. It's not in accord with other central banks. It's not in accord with other monetary authorities. You know, it's acting on its own there. And so that's why it's a big deal, important to pay attention to.
Right, and so that is important, isn't it, Paul? Because I wonder how long-lasting the impact of this intervention is going to be if there is no change in underlying Bank of Japan policy, which partly has been driving yen weakness, and if there is no coordination.
Yeah, probably not that sustainable at these levels. You know, you would expect that if everything stays the same, then the tide is going to come back again towards a weaker yen, you know, kind of. But what the Bank of Japan, what the Ministry of Finance can do is slow that pace of weakness, right? So it can make people cautious about taking large positions betting on a weaker yen again. It can put these little roadblocks along the way. I think the thinking is probably we don't want to draw a line in the sand because we know that the market will test that. But if we can surprise it every now and then, if we think that we're moving too far, too fast, then that can have some sort of effect at giving some sort of sense of stability in the currency markets.
All right, Bloomberg's Paul Dobson, thank you so much for your reporting on this breaking story. The Bank of Japan deciding they will still keep policy easy. They just may have to deal with the yen in other ways. One central bank, though, definitely not keeping policy easy is the Federal Reserve. Officials gave their clearest signal yet that they're willing to tolerate a recession as the trade-off for regaining control of inflation. Policymakers raised rates by 75 basis points for the third time in a row.
The median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, you know, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that.
Bloomberg's Danny Berger joins us now for more. Danny, is there any possible way you could have read yesterday as dovish?
No, definitely not. I mean, maybe they didn't go 100, but even so, Kaylee, they didn't have to go 100. They still were able to deliver this hawkish surprise to markets. For a radio listening audience, I have the dot plot in front of me. And by lifting where they see rates for this year next, 4.4 and 4.6%, this was essentially the equivalent of delivering an 100 basis point surprise onto the market without actually doing it. No one really saw this coming. The market wasn't pricing it in. Economists weren't pricing it in. So with that, the Fed is sending a very clear signal that they're willing to put cracks into this economy. As Jay Powell said, there's no painless way to do this at this point to bring inflation down. At the same time, unemployment is going to be 4.4%. That's their prediction for next year as well. That sure sounds like not a soft landing. These markets have responded. We're looking at a yield curve that at one point was its most inverted since the 1980s. At this moment, it's its most inverted since back in the 1990s, but still it is clear with a bond, a front-end yield that continues to move higher above 4%, a cap on long-end yields, that there really is this concern about recession being priced into the markets.
So that's the concern over in the US. US policy set largely, of course, for a domestic audience, as most policy is from central banks, but they have read across, don't they? And what the Fed is doing has an impact elsewhere in the world.
Absolutely. Look, it's what Paul was just talking about with the issues with the yen. Anna, you were talking about the S&B. It really is this conundrum for central banks that in the face of an ever-aggressive Fed, everything they do looks small in comparison. I mean, S&B ending negative interest rates for the first time in about 8 years, but still that doesn't look like enough to keep strength in the currency when you have a Fed doing what it's doing. You've seen this pressure yields, you've seen this pressure not just treasuries, but German yields, for example, the German yield curve inverting the most on record, and the last time it inverted was 2008. This is a lot of stress that global markets are under, and the Fed does not seem like it's going to be stopping that.
All right, we'll be, I mean, this is really the only story in town right now. Danny, thanks so much for joining us. Meanwhile, traders are bracing for the Bank of England to deliver its 7th back-to-back rate hike later. And just more central bank news. Lizzie Burden joins us now for more. Lizzie, 50 basis points or 75? What do you think the central bank is going to do today?
Well, markets expect 75 basis points. Economists only see 50 basis points. Economists are taking account of all that weak economic data that came out of the UK last week. And the Monetary Policy Committee, of course, has had time to digest it because this meeting's been delayed because of the Queen's passing. They also look at the energy bailout from Liz Truss, the new Prime Minister, and they reckon that the short-term inflation impact is going to be softened. Markets, meanwhile, though, are looking at the international context, as you mentioned, even the Riksbank going for a full-point hike. But you have to ask, is the Bank of England really going to take account of that? It was letting the Fed do 75 and while it was doing 25. Is that going to change? The other thing we're going to be watching is the flip side of the bailout. It's going to necessitate a lot of borrowing. We're expecting a load of tax cuts in the mini budget out of the UK tomorrow. And so is the Bank of England going to slam the brakes on active quantitative tightening given the borrowing coming down the pipeline? Some economists are saying no, because the Bank of England has been accused previously of monetary financing, so it's not going to want to look like it's in cahoots with the Treasury. But BNP Paribas does say they're going to hold off on active gilt sales for now.
All right, a monetary and fiscal conundrum. Bloomberg's Lizzie Burden outside the BOE, thank you so much. Meanwhile, big bank CEOs began testifying in Congress yesterday before the House Financial Services Committee. The testimony covered a range of topics, including crypto. JP Morgan CEO Jamie Dimon minced no words about his views on the matter.
Yeah, I'm a major skeptic on crypto tokens, which you call currency, like Bitcoin. They are decentralized Ponzi schemes.
Kind of a buzzkill. Shonali Bostic, our global finance correspondent, is joining us now for more. So Shonali, other than going down on crypto, what else were your takeaways from yesterday, and should we just expect more of the same in the Senate today?
It's a good question. This was a committee that was dealing with stablecoin regulation, so there was not a lack of purpose to those comments about cryptocurrency, but there was a lot else at stake here. Congressmen were very concerned about China. One had even asked the bankers if they would retreat from China if China were to invade Taiwan. There were a lot of concerns about diversity. One lawmaker was also very concerned about jobs and really called out Wells Fargo in particular for conducting 9 rounds of layoffs in Iowa and the reduction of that mortgage business. We knew this. Lawmakers would be very concerned about the housing market. And there was a lot of discussion, I would say, also about the impact of more regulation and what this would mean for increasing capital requirements and the impact then on lending. I would also say, though, that there were lawmakers who did recognize that this did not only keep the banking system safe in the last decade or so, but the banks were still immensely profitable in that decade. So there was a lot of rhetoric here, but again, this is now, we've been doing this since 2019. Will it continue in the coming years? We'll see if the texture of these committees start to change post-midterms.
We got another report about Credit Suisse. Honestly, there's a whole industry covering just Credit Suisse and its woes, right? In Zurich.
Yeah.
They could resurrect the idea of a bad bank, according to the FT. What do you hear?
We've seen this done before, and remember, this is in the grand plan of Credit Suisse really trying to stave off raising more capital. Remember, their cost of borrowing is already increasing because of that really ratings issue that they're having. But there's a range of things being discussed here, a bad bank being one of them. The FT is reporting that part of what could go in that bad bank is that securitized product group that could also potentially be sold. And we have previously reported that potential buyers could be Apollo, could be BNP Paribas. So a lot of potential beneficiaries as Credit Suisse shrinks down, but a lot of options for this firm as it restructures. However, we are seeing that restructuring plan taking more shape.
Shanali, thank you very much. Bloomberg Shanali Basak with all things finance. We'll get back to the latest moves in FX markets and beyond. We will talk about the US economy and the Fed, the strong dollar and the impact of that globally. Danielle DiMartino Booth joins us, a former Fed advisor who's now CEO and chief strategist at Quill Intelligence. We will also talk FX then with Jane Foley of Rabobank. How sustained an impact can the Japanese government have? This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark. It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. Now, we are looking at really an historic day, and I've got a chart to illustrate that. The last time we saw intervention by I guess the Japanese finance ministry, because they're the ones who do the intervention, not the BOJ, in the yen to strengthen the yen, to halt weakness, was 1998. So it's been, 24 years since we've seen this kind of action in markets. Dana El-Baltaji, Bloomberg managing editor for credit, joins us now. And I was trying to think about what links this to your world, to credit financing, Dana. And I guess probably a lot of people use the yen as a carry trade. What else do you see in this that will relate to what you're covering today?
You know, it really depends on whether or not you think this is going to have a long-term impact on the weakening currency. And I really agree with the assumption, with the assertion that this is basically a roadblock on a otherwise very hard road to weakness. I mean, I think basically what they're trying to do is that they're trying to make it kind of difficult for people to assess how weak it's going to be. But I do think that the dollar strength is kind of assumed here, and that's why they have come in. I don't know how often they will come in, but ultimately, I think the carry trade is still alive, and I do think that there will be interest in assets in this part of the world with that carry trade.
Okay, and before we were talking about the BOJ, we were still reeling from a further iteration of the Fed hawk story, and that's certainly what we saw. The impact on credit markets from that, Dana, is that something that keeps on giving?
Oh yeah, absolutely. And the thing is that you can actually see with risk that it's going up and it's going down, and people don't know how to assess what is going to happen. When a central bank comes and says that we think that our currency is too weak, or when a government says that they were going to intervene, you basically have a sense that there might be some support in that market. However, if they come in and they support that market, that means that there is a lot of pain that is coming. So you've got these two opposing forces. Now, what we are definitely seeing is a repricing of risk. We now know that recession is probably on its way, and it's a whole new question of valuation. What is the value of the asset? How much can you pay for a specific asset? At this point, we don't know what valuations will look like.
Okay, Diana, thank you very much for that. Bloomberg's Dana El-Battaji with the view from the credit markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal. That's where you find the Markets Live blog. They're all over the FX moves today, that's for sure. This is Bloomberg.
Difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I'm Kaylee Lines.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Now keeping you up to date with news from around the world, here's the first word. Bloomberg's learned that Ukraine has seized dozens of tanks left by Russian forces fleeing the battlefield. That adds crucial weaponry at a time Ukraine needs it. One person familiar with the matter says around 200 tanks were captured, but there's no word on how many of those vehicles were damaged or destroyed. President Biden and new British Prime Minister Liz Truss have pledged to work together to support Ukraine. The two held their first in-person meeting on the sidelines of the UN General Assembly. They said they would also discuss unresolved issues relating to post-Brexit trade and the Irish border. In Manhattan, the hot rental market ended its 6-month streak of record-setting prices in August. New apartment leases were signed at a median price of $4,100, down $50 from July's all-time high. That's according to appraiser Miller Samuel and brokerage Douglas Elliman Real Estate. The August median rent was up 17% from 3 years ago. And in the world of crypto, Jesse Powell, the outspoken and often controversial co-founder of the Kraken cryptocurrency exchange, said he is stepping down as CEO to spend more time on the company's products and broader industry advocacy. Kraken's current COO, Dave Ripley, will take his place. The transition is expected to take place over the next few months, and Powell will become chairman of the board. Speaking of chairman of boards, Fed Chair Jay Powell sounding very hawkish in that press conference yesterday after a 75 basis point hike. We'll discuss with Daniel DiMartino Booth of Quill Intelligence next. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, you ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The price of crushing inflation. Fed Chair Jerome Powell signals that a recession may be necessary. It's the Bank of England's turn next in the spotlight after the Swiss announced a 75 basis point hike. Meanwhile, the Japanese government has intervened in the foreign exchange market to try to prop up the yen as the Bank of Japan holds firm on its ultra-low rates. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, what with the focus on the Fed and what the Japanese are doing with their currency, what the SNB are doing on rates, I've totally taken my eye off stocks.
And
it's all
Bank
been about
of England
FX
is coming out later. I mean, you got to have your head on a swivel.
Absolutely.
Yeah,
you need a number of heads. today. So tell me what's going on pre-market.
I was thinking the same thing. We're looking at futures right now that are just up 0.2%, but who has time to even look? With all of the news coming out and things that we haven't seen since the 90s, things that we haven't seen in terms of the 2s, 10s since the 80s, and there's so much to focus on this morning. Right now, S&P futures at 38.14, the 10-year yield at 3.53. Maybe more interesting is to look at the 2-year yield. It's up over 4%, and the spread is out to 60 basis points now to the downside. The dollar index right now at 13.19, almost 13.20, so hovering at a record high. On the other hand, it's getting some pressure on it because the finance ministry in Japan is intervening in the dollar yen. So very interesting stuff, kind of working at cross purposes with the Bank of Japan, which refuses to raise rates for like 2 or 3 years. Talk about forward guidance, but Kaylee will get to that in a moment. And then Bitcoin. Right now, it's even hard to think about something as small as Bitcoin compared to moves as large as global FX, but it is a currency that a lot of people pay attention to, up over $19,000 right now. And it's been in the news, right, because Jamie Dimon yesterday said in front of Congress that crypto is a giant Ponzi scheme. Kaylee?
All right, well, you promised it, so I'm going to deliver more on the Japanese yen right now. Because as you said, Matt, the Bank of Japan had a decision overnight. They decided to not do anything, to maintain their easy policy, ultra-low rates, continue yield curve control, all things which contribute to weakness in the currency, which is why we saw the Japanese yen breaking above that very closely watched 145 level to the US dollar. That is weakness we hadn't seen going all the way back to 1998. And as a result, we see intervention of the kind we have not seen since 1998, the height of the Asian currency crisis, with Japanese officials intervening directly in the currency markets to support the yen and stem its weakness, which is why we saw after a weaker Japanese yen to start the day off the back of that BOJ decision, it is now a decisively stronger Japanese yen, a straight leg lower on an intraday chart right now. The yen stronger against the dollar by 1.25%, trading right now at 142.26, Anna.
And Kaylee, that decision by Japanese officials, by the Japanese government to intervene in FX markets, having an impact even here in Europe. We'll get to that in just a moment. This is the big picture on European stocks, though. A day after the Fed, getting the first chance to factor in what the Fed said and that level of hawkishness and the height of the dots that we saw for next year. And we see stocks selling off as a result, down by 0.7%. Not all sectors negative at this stage, 2.5 hours into the European trading day, but most of them are, and the story is weaker for risk assets. Interesting to watch what's been happening at the SNB. The Swiss National Bank increasing interest rates by 75 basis points. We used to call that jumbo. We seem to be redefining jumbo hikes as every week passes for global central banks. But that's what they did. That was as expected, but the currency fell. This is the euro gaining against the Swiss franc because they also talked about their ability and their willingness to intervene in FX markets if they want to. And of course, they've seen strength in their currency of late. This is the pound against the dollar. And really, it was the Japanese authorities intervening, of course, in what's going on in FX markets. But that did have an impact here. So just as we saw the yen gaining, we also saw the euro gain and we saw the pound gain. So it's as if the strength in the dollar around the world was for a moment being questioned, and we see the pound hanging on to those gains back above 113.09, and it is Bank of England day. We'll keep an eye on that later on. And UniCredit up by 5.7% for the Italian bank. The CEO of this business suggesting there could be an upgrade to come to their guidance for what they can achieve in the third quarter. The rising rate environment clearly better for the banking sector, and that is one of the best performing sectors today here in Europe, Matt.
It's so interesting to hear that the pound is holding on to gains at 113, right?
Because lofty levels of 113.
Yeah. Joining us now to talk about all of this and what we heard from Jay Powell. Don't forget, the Fed was just yesterday, is Danielle DiMartino Booth. She's a former Fed advisor. She's now the CEO and chief strategist at Quill Intelligence out of the Big D, Dallas, Texas. She joins us, though, in the studio here in New York. Danielle, great to have you on set. Tell us first about why we're seeing this kind of action in Japan. In the makeup room, you said to me, the Fed has the Japanese and the Europeans behaving like emerging market economies, which is crazy.
It's what it appears to be. I mean, that's what we're behaving like, right? The IMF has bailed out everybody else. So what are we going to focus on? But that is the nature of currency wars gone wild against a backdrop of central banks competing with one another. We might see 75 basis points out of the Bank of England with unusually large rate hikes when all other countries, if they're manufacturing, if they're exporting, they want to remain competitive. But this is like the big stuff, though. I mean, we're talking, you're saying we're going back to the 90s, we're going back to the 80s. This is like the Breakfast Club soundtrack in my head here. But it is
Simple
just...
minds.
Yeah, well, yeah. But this is, it really is crazy. But when you think about how resolute he was yesterday, it's like, you know, the U.S. economy is going to expand at 0.2%. That's how we're going to start this press conference. By the way, we're telling you that we're going to tighten into a recession. We're letting you know.
Well, basically no longer being shy about the fact that the cost of fighting inflation is pain in the economy. And yet when our own Michael McKee asked him, how are you going to know if you've done too much, if you've gone too far with that? He gave a non-answer. I mean, realistically, is the reality we're looking at here, the Fed is going to go too far because it won't know in advance that it is.
I think that the Fed has already told us that it's going too far. If you look back to every rate tightening cycle since 1980, the Fed is tightening at 3 times the pace. This all just started in March. We said it just a few days ago.
It's wild.
And we've already seen as much as we have. And he reiterated in the press conference over and over and over again, we might consider pausing as soon as we get to 5. I mean, and that's where he's going. He's getting to the end result, and he's not stopping until he gets there. And he really doesn't want to have anybody ask him about it.
He doesn't want to, but they will keep asking, won't they, Danielle? Good morning to you. Let me ask you then about the strength in the dollar and how that goes down with the Fed, how that goes down in the U.S. economy, because clearly we see policymakers globally objecting and taking action. We're just looking at some lines coming through from a press conference being held by the Japanese finance minister, having to talk about what actions they've been taking against what they see as excessive moves in FX markets. But how does the strength in the dollar play for the Fed?
You know, it's interesting because the only time I felt that he was nuanced during the press conference yesterday was when he asked about how Fed policy was going to affect other countries around the world. You're not making policy on an island. And he basically said, well, there's no perfect formula here. He was saying, we're sorry in advance, but we're going to keep on going. But it was
we hung out in Basel. We talk on the phone occasionally, but we're not working in concert.
And that's so unusual because we've come through a period in which, in the post-QE era, central banking has been globalized and coordinated. This is not, you don't run off like a cowboy into the West doing what he's doing, and yet nothing appears to be stopping this man. And I speak about him as an individual, even though yesterday he said, we, dot plot, we're all in concert here. We might as well all be Jim Bullard. Everything's going to be unusually large, but he was clearly speaking for himself.
You brought up an interesting, I'm going to call it a conspiracy theory yesterday with me and Paul Sweeney on radio, saying that it's not just about inflation here. Jerome Powell has an ulterior motive. What do you think that is?
I think he does. I think he's tired of the tail wagging the dog. I think that he wants for the Federal Reserve to make monetary policy, not for markets to make monetary policy. If that's going to be the dynamic, if he's going to actually bring back independence to the institution, he's going to have to break the Fed put. And that means he's going to have to really create a lot of destruction in the financial markets, which we've already seen. I mean, think about where the S&P is right now, going into what he's already telling us is going to be carried through 2023. It's not inflation. He's already seeing signs of disinflation in discretionary goods. We've all seen signs of housing turning. He knows that a year from now we're not going to be so crazy worried about inflation, and yet he's going to keep going. And that to me means he wants to break the market psyche of the Fed's always going to have your back.
Well, and the market seems like maybe it finally got the message, although it really couldn't decide yesterday for several hours in the wake of that
was existential. It was watching go back and forth.
I couldn't take my eyes off the chart. One more central bank coming this morning, the Bank of England. As you said, they could very well hike 75 basis points. There's the monetary question in the UK and the fiscal one. Ultimately, is supportive fiscal policy from the new prime minister going to be more disinflationary or inflationary because if people are spending less on energy, they have more to spend on other things?
Well, I think that that's what we've seen here in the United States, right? We've seen that whenever consumers are given a little bit of latitude, that they'll take that latitude and put it somewhere else in discretionary goods, in things that are not essentials. And so we're going to have to wait and see. I think it's hard for Americans to couch what's going on in Europe because we have no concept of what they're spending to cover their energy needs.
Danielle, thank you very much. Danielle DiMartino-Booth of Quill Intelligence. Yes, the extent of the rise in energy prices certainly keenly felt here in this economy and over the channel in the Eurozone as well. We will talk about FX, though. Back to the FX lines. We're seeing plenty coming through from the Japanese finance minister this hour, talking about what they've been doing in FX markets, intervening to support the Japanese currency. We'll talk to Jane Foley, head of FX strategy at Rabobank, get her perspective on how sustainable these moves in the yen are. This is Bloomberg.
Possible the industry is in an arms race that will lead to spending itself into an oversupply. I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry cost $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. The story today is in Japan. The yen is stronger after the country intervened in the foreign exchange market for the first time to intervene for weakness since 1998. Jane Foley, head of FX strategy at Rabobank, joins us now for more. Jane, we've been talking about it for some time now as the yen hits weaker and weaker levels. When are they going to step in? They now have. It seems it's working today. Is it going to stick?
I don't think so. I mean, if we look at the history of intervention, and of course we have to go back quite a long way if we think about that in terms of the G7, but if we think about the history, well, what we know is that intervention only works if we can really say confidently with hindsight that, yeah, you know what, the fundamentals were pulling in the same direction. And yet look at the fundamentals that we have for dollar yen. Even this morning, we had the Bank of Japan policy, the Bank of Japan reiterating, sticking to its guns about its really loose monetary policy conditions, and that was just hours after the Federal Reserve came out with a very hawkish policy response. So we know that the fundamentals will still be dragging dollar yen higher. I think what today's intervention was all about was just perhaps slowing the movement, just putting a little bit more moderation in that move. But I do think that dollar yen is still likely to be pushed higher as long as we've got the Bank of Japan and the Fed on these opposing policy courses.
Yeah, one of our colleagues writing that perhaps the aim here is just to make it more expensive to bet against the Japanese currency and to reintroduce a bit more two-way risk into that trade because it had been so crowded in one direction, Jane. In terms of intervention, though, some people are saying, well, agreeing with you that maybe this doesn't have a long-term impact because it moves counter to what the BOJ is doing elsewhere, but also because it doesn't necessarily have international support. If it had coordination, it would be different. And so interesting to see the ECB saying it didn't intervene in Forex markets. How do we interpret what we're hearing from other central banks not playing in this particular attempt?
you know, it is very political. When you're talking about the G7 and intervention, it's political, and you have to wonder why, you know, it's been so long since the Bank of Japan intervened. Now, it did intervene in 2011, and that was with the blessing, really, of the other G7 central banks. But that was after the nuclear disaster. There was a human issue there, and that's why. So if we take that one out of the equation, we do have to go back to 1998, perhaps, till we see a similar position. And meanwhile, in all of that time, there's been a series of G7 communiques when they really have effectively signed a communique to say that markets should be setting exchange rate, not central banks or the Ministry of Finance in this instance. And so it does go against the grain of what perhaps they've signed up for, and we haven't had you know, a sign-off, obviously, from other central banks, at least not yet. And you do wonder if the Ministry of Finance can keep on intervening unless there is some sort of nod that other authorities think that this is possible. Now, they could use perhaps some of the wording in the 2017 G7 communique, which says that you know, excess volatility is untoward. It's not desirable, and perhaps that is their excuse, gives them a little bit of a reason as to why they went today. But on the assumption that it hasn't been signed off by other G7 treasuries, then yeah, this is something which could be quite limited in its nature. It could be quite difficult for the Ministry of Finance to really sign off on.
Jane, I was thinking when I first saw these headlines about the yen carry trade, and I don't really know how prevalent it is. A trader writes in and asks, with major currencies trading like meme stocks, will markets start worrying about the risk of hedge fund blowups? Is it a hugely prevalent trade? Is this likely to affect market participants in a major way?
You know what, if you were doing something like just shorting the yen and buying the US dollar this year, you would have made an awful lot of money. If you were buying the Mexican peso, you would have made an awful lot of money by shorting the yen. So there have been, you know, quite a big carry trade, and perhaps this is what the Ministry of Finance is trying to break. Like Anna said, just make it more expensive to short the yen, to try and throw this upward trajectory that dollar yen has been on, throw it off course a bit, add a little bit of two-way, slow down the move. Now, I think that's all that it can achieve, slowing down the move. But certainly, you know, over the last week or so, there have been reports that the Ministry of Finance has been checking prices. That has added, you know, some anxiety into the market. Traders a little bit nervous about that. But of course, verbal intervention and checking prices is good. You know, it can certainly make the market anxious. It certainly has brought dollar yen lower. But that loses its credibility unless it's followed up really with action, and that's what we've seen today. So perhaps going on for the next few weeks, the next few months, we'll have more verbal intervention, more checking of prices to keep the market on its toes, to keep the market nervous. But I don't think that they are going to be able to perhaps stop the uptrend. They're just going to be able to slow it.
What?
Right. Sorry, Matt.
Sorry, we got to go. I mean, I have a million other questions, but I'll just call
He's
Jane
just so
after
carried
this,
away by this topic, Jane. It is very exciting. The finance minister in Japan saying they have sought understanding from other nations on FX. So we'll see what other nations have to say about this. Jane, thank you so much for your time. Really good to get your explanation. Jane Foley joining us there from Rabobank. Coming up on this program, we'll be back to thinking about geopolitical tensions. President Biden slams Russia's actions in Ukraine. We'll discuss the latest on the war with Edward Stringer, retired Royal Air Force Air Marshal. Get his perspective. This is Bloomberg.
capability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This world should see these outrageous acts for what they are. Putin claims he had to act because Russia was threatened. But no one threatened Russia. And no one other than Russia sought conflict.
President Biden speaking at the United Nations General Assembly this week, aiming to rally international support for Ukraine. His comments came after Vladimir Putin mobilized army reserves and renewed his nuclear threats. We're joined now, I'm pleased to say, by Edward Stringer, retired Royal Air Force Air Marshal and a senior fellow at Policy Exchange. Edward, thank you so much for joining us. 300,000 reservists. What difference can that make to the difficulties Russia is having in this conflict at this point?
I think if we're honest, it's only going to add to them. I mean, 300,000 people is 1.5 times as many as Putin thrust across the border in Ukraine at the start of this war. We've seen the Russian armed forces lack capacity. They're running out of weaponry at the moment. Just imagine the logistic challenge of even trying to clothe 300,000 new troops, let alone train them, let alone get them up to any form of operational readiness. So I think we'll see, as has happened before when Putin tried this, that this sounds good up front, but it's going to be very difficult to achieve in practice.
Well, it takes a long time, and it underlines the chronic problem of this Russian war in the Ukraine. The more acute concern is the anything it takes line, and he's not bluffing. Are there layers between Vladimir Putin and the possibility of a nuclear strike? I mean, I would hope that there are layers even between the U.S. president and the possibility of a nuclear strike. What kind of fail-safes are in place, or can he just push a button and do it?
No, in none of the nuclear states have got systems where you can just push a button. We haven't seen in the intelligence that there's been much movement of his nuclear forces to put them up to higher readiness, whatever he said at the start. Because you remember he made 3 overt mentions of nuclear weapons at the start of this conflict. So there are layers. It has to go down through a command chain. There are several military officers that have to do their part. So yeah, there's a nuclear firing chain. It's not just a red button on his desk.
Okay, so there's layers in between, but do you think it's ultimately going to come to needing all of those things to take shape? I mean, how real is the threat of nuclear weapons, even if they're tactical, being used in this war when it seems like Vladimir Putin is running out of options?
I think the White House is playing this pretty sensibly at the moment because one doesn't want to dismiss it and say this is pure bluff, but nor do you want to be shrill and start talking it up because that actually will be playing into Putin's information operations. So it's unlikely, but if there's any possibility, it has to be taken seriously and therefore it has to be managed appropriately. The various military planners chiefly American, but NATO will be involved, will already have been looking at options. And so when Biden says there will be a massive response to anybody breaking the nuclear taboo, he is not bluffing. There would be such a response.
What kind of ambiguity do you think NATO needs to put between itself and what Ukrainian forces are doing on the ground? Clearly, there's a supply mission in place, money and weaponry is being sent, but what kind of lines need to be drawn?
Yeah, I think the red lines have been drawn well and maintained, and that's why there was no no-fly zone at the start of this operation, because we were not going to hand the propaganda victory and cause us bell-eyed to Putin that NATO is attacking Russian forces. And so you won't see direct involvement of NATO troops unless, as we just discussed, something catastrophic in the nuclear domain happens. But what is vital to Ukraine is you continue to maintain the financial, political and military logistics support. And that's perfectly fine under Article 51 United Nations. All nations have a right to self-defense and can draw on what support they can get. Those red lines have been scrupulously maintained, and you can see it even today as Biden mulls over whether he's going to supply the longer-range ATACMS system, for example. I think that's been well maintained at the moment, but we must.
Edward, thank you very much for your time. Yeah, thanks for your contribution. Really good to speak to you. Edward Stringer, retired Royal Air Force Air Marshal and a senior fellow now at Policy Exchange. That is it for Early Edition. Surveillance is ahead with Tom, John and Lisa. They will be all over the latest movement at the Japanese Finance Ministry, the Ministry of Finance. They're intervening in the FX markets, not happy with the weakness in the Japanese currency. They have a full lineup of guests to think about that and tighter Fed policy. This is Bloomberg.
What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
In a $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Today on Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Chairman Powell has got one mission, that's to deal with inflation.
The Fed continues to be really focused on the emerging data.
The Fed's trying to get the economy in a position where inflation comes down, and then it can take its foot off the brake a little bit.
The Fed goes through tightening spells and easing spells and pauses.
A soft landing is actually still likely.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here come the Hawks, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. The equity market's a snooze. It's unchanged on the S&P. TK, the FX market, anything but.
Yeah, get out the history books and take the history forward here to, what is it, John, 7 a.m. this morning, Wall Street time. Will the Bank of England intervene to protect sterling? I mean, it's not going to happen, but guess what? We're thinking about it.
Dollar yen, 143. TK, can you imagine finishing the day in dollar yen unchanged?
Yeah, well,
this yen strength.
Yeah, you know, it's pretty elegant is all I can say. I did a very fancy study. You can only do it on the Bloomberg terminal. That's why people buy the terminal every day. And John, we had an absolutely perfect 50% Fibonacci retracement, strong yen down to a 142 level. And now what? And the now what in every case is this will fade away over time into a non-event for the Bank of Japan.
You can talk, you can nibble, Lisa. At the end of the day, you've got to talk about the underlying policy issues that got us here.
How much money are they spending to really embrace this fiction of yield curve control? I mean, I'm going to throw this out there, but they came out overnight. It's reality, though. I mean, they came out overnight. They reiterated their yield curve control. They've been buying bonds at an incredible pace. I think they bought more than 2 trillion yen worth of bonds to keep that cap. And now they're going to intervene on the other side. How much money are they spending to try to fight a market that does not want to be fought?
Spare a thought for the S&P this morning, Bramo, Swiss National Bank. How big was that hike and what did that currency do?
Okay, well, this is the interesting thing. 75 basis points, right? They actually are leaving the negative rate regime for the first time in 8 years, and the franc fell the most since 2015 versus the dollar. And this really goes to the whole thing that we saw from the Riksbank, right? With the with what we saw just based on this idea that it's not enough anymore. You have to surprise to the upside.
And John has this tattooed to his brain, folks. Americans miss this completely. John, explain the history of the Swedish bank of being out front. It's a European thing that we don't study, and it's a big deal.
Well, it's the original gangster. That's what I said yesterday, Tom. World's oldest central bank, out with a 100 basis point hike. To Bramo's point, not enough to prop up the currency. We've got the S&B doing the same thing this morning. Tom, I wonder what that means for Governor Bailey and this Bank of England. If he's looking at what the S&B did this morning, what the Riksbank did yesterday, and what has not happened in this FX market.
And bring it over to Lagarde and the weakness in euro that we saw yesterday, 0.9858 right now. What I would say, John, and this has been the hallmark of Bloomberg surveillance for too many years, I'm afraid to mention, from Mundell to Frankel, we never spoke to Rudy Dornbush, who died so tragically and early, his iconic paper of 1980. This stuff matters to all of our listeners, all of our viewers. FX matters, and we're going to lead on it.
Chairman Powell causing some problems. Futures down 0.1% on the S&P 500. On the Nasdaq, we're down about 0.25%. In the bond market, yields shaping up as follows: higher by a basis point, 354 on a 10-year. The 2-year gets our attention in the last 24 hours. To be honest with you, it's had our attention for the last couple of weeks. 4.1% on a 2-year yield. Lisa, higher by 5 basis points today.
So now it's over to the Bank of England, it's over to the rest of the world, and it seems like, based on what we saw overnight from the Swiss National Bank, it is going to be hard to surprise in a hawkish direction after yesterday's proclamations from the Federal Reserve. I would argue it was not the 75 basis point rate hike. It was the change in the projections, the change in the outlook. And at 7 a.m., the Bank of England has a very difficult situation. They're probably going to raise rates for the 7th consecutive time. The expectation was for maybe 50 basis points, but right now the market seems to be thinking that there's going to be some sort of outsized surprise because of that British pound and the incredible weakness that we have continued to see. This is between a rock and a hard place for Governor Bailey. They have one of the most difficult jobs. He has been out front with being honest. How low are some of the projections for the economy in the years ahead? At 8:30 a.m., U.S. initial jobless claims. I actually think this is going to take on more and more importance, especially after what we heard from Fed Chair Jay Powell yesterday. They want to see the unemployment rate go up, and I go back to what Neil Dutta said. The faster the unemployment rate goes up in a perverse way, the better for risk assets, because it will mean that the Fed can back away from some of their aggressive rate hiking cycles. So far, We have not seen that. We've seen the unemployment claims that really fall off. They've actually not gone up, and the unemployment rate is still historically low at 3.7%. And aftermarket, John, I would say that this is actually becoming more and more important as well. The earnings, especially from some of the bellwether companies, FedEx and Costco reporting after the bell, and FedEx came out with that report earlier the past couple of weeks, warning about some of the fast-moving macroeconomic backdrop that caused them to revise downward their estimates. All right, let's see what they put out there now. Costco similarly, especially with the margin story and with the respect of who is coming to their stores. Are we seeing more wealthier individuals going to more classically cost-cutting companies? That's what we saw with Walmart. Are we going to see that with Costco as well?
Lisa, thank you. A few things to watch through today and into the close as well. George Concava's joining us now, the head of US macro strategy at MUFG. George, let's reflect on Chairman Powell in that news conference. Do we now believe the recession is the price this Fed is willing to pay to get inflation back to 2%?
At a minimum, look, we're dealing with an uphill battle here with what's going on with the dollar globally, what's going on with U.S. interest rates. And I think, we have not seen enough, financial conditions tightenings to the Fed's liking. We got a decent amount post the meeting with the move in the S&P. But, they're really going after aggregate demand as a way to really curtail inflation. It's a massive experiment. It's a credibility thing. They really want to prove that they can actually corral inflation. And they're going at it hard. They're going to hammer rates. The rates market's ready for it. I just don't think the other markets, are ready for it. And it's really going to make it difficult for all the other central banks that are trying to tighten at the same time. But the Fed's going to win out on this one.
George, I did a Google search last night of Fed blinks, and I was sort of stunned at how many items came up. When do they blink, and how do they blink?
Ultimately, and this is something, not the only thing I've been saying, but others have been saying the same thing. Either something breaks in the market, and so far we haven't seen that yet. Even though we're seeing some pretty epic moves in macro type products, it's relatively orderly and functioning. And so until something breaks or the economy breaks and we see that move, I think Lisa's point is well taken on the claims data. Once you see jobs data really turn, but all this stuff operates with a huge lag. And the real problem that I think we're facing, and this is I think it's going to be a challenge for the next 3 months into year end. The Fed basically wants to wrap up or get very close to the end of the cycle by this year. So they're massively front loading. We only have 2 meetings left. If they had given us these SEP dots in June, we probably would have dismissed it. But now that they're actually leaning on them, after years of telling us to dismiss the dots, they're using it as forward guidance. They have 2 meetings to turn around. That's not enough time. They're going to have to go to 4% and wait till something breaks.
I want to pick up on that point. You said that there's epic macro moves right now that are going on, but things are not breaking. The market is still functioning. This goes to something that Rich Clarida, former Fed vice chair who was on with us yesterday, was talking about. He's not looking in the domestic market for something breaking. He's looking internationally. He's looking from those risks, particularly with respect to the strong dollar and what's that doing. Where are the nodes of concern in your mind for something breaking?
Look, I think in general, small to medium-sized enterprises that got dollar funding globally through their local jurisdictions. The dollar scarcity thing is what all central banks are up against, and then on top of that, you have a hawkish Fed. So I think it's really the small to mid-sized companies globally that either relied on dollars or through some sort of cross-border type activity need that sort of dollars, and they're going to be running out of them.
George, you represent a Japanese bank. It's improper to ask you about yen intervention. Completely inappropriate, folks. But I do want to ask you.
But I want to do it.
No, I'm not going to go there. But George,
why not?
I'm rereading Rudy Dornbush's 1980 paper where he literally has charts drawn by hand off his desk at MIT. Are the rules of the game now the same as it was pre-Plaza Accord, post-Plaza Accord? And frankly, are the rules of the game the same now as they were in August of 1998?
I think what the bottom line kind of base feature for overall sort of like FX markets, it's all about the rate of change. And I think that's what really central banks would react to. So I think it's interesting to see what happened overnight, obviously. But we're seeing the yen kind of come back. And the one thing that historically has proven to be true, if it's a unilateral move by a central bank, it usually doesn't work until there's actually more of a coordinated effort. So it's too early to tell if that's actually even taking place or if it's something that happens down the road. But the first salvo usually doesn't stop it, right? And so this is something, it's all about the rate of change. I don't think there's a level in mind in terms of what they're looking at, but I do think that it's going to take some time, and really, quite frankly, it comes back to the Fed. I mean, when the Fed stops hiking, I think that's going to take pressure off of all these currencies.
Hey, George, thank you. You're a good sport, because you basically talked about Japan too. George Concalves there of MUFG. Thank you, buddy. 145, Bramo. Is that the line in the sand?
I mean, that seems to be what happened, right? I mean, the yen's been bumping up against that level or bumping down against that level, if you want to talk about weakness versus the dollar. And then they crossed it, and all of a sudden, we heard Japanese authorities come in and say that they had intervened. So you do wonder if that's now the cap, 145. And
143 right now, negative 0.7% on that currency pair. One of the best takes I've seen out there in the last 12 hours or so came from Ed Bradford on Twitter. The Fed has become so enamored of forward guidance that their projections are no longer what they think, but what they think they need to signal. Tom, I think that line is so important. The projections are no longer what they think, but what they think they need to signal. Well, there's a difference.
I mentioned this, John, yesterday, seeing Brian Chapada's dots interpretation. It's a different dot chart than any we've ever seen before. And to me, it was almost barbell of two views, and which view will play out. And the answer is nobody knows, including the people making the dots.
This is the challenge that investors have right now. Another way of putting this, Lisa, is effectively this Fed does not want to see an easing of financial conditions. To achieve that, they're leaning hard on this signaling that we're going to be tighter for a whole lot longer.
So this is where the sort of psychological aspect of the market comes into play. I feel like everyone's trying to psychoanalyze the willingness of the Federal Reserve, testing how willing they will be to double down on this when the unemployment rate actually starts to go up and it becomes a political issue. That now is the question. They're trying to signal. So is this just basically game theory, or are they going to go through with it even as they see that pain hit real individuals?
What did Max Kettner of HSBC say yesterday? Heads you win, tails I lose. That seems to be this market right now. Futures down 0.1% on the S&P. It's on the edge of Lisa then.
I was about to say uplifting.
You sit too close to each other. Yields up a basis point, a 10-year, 353.99. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Japan, the yen is stronger today after the country intervened in the foreign exchange market for the first time since 1998. The currency had weakened to 145 per dollar following the Bank of Japan's decision to maintain ultra-low interest rates. The yen has fallen about 20% this year. Fed Chair Jerome Powell gave his clearest signal yet that the central bank will tolerate a recession if it can regain control of inflation. Policymakers raised interest rates by 75 basis points for the third time in a row. They also forecast that rates could be raised another 1.25 percentage points by the end of the year. 2 American military veterans fighting for Ukraine were among those released as part of a prisoner exchange brokered by Saudi Arabia and Turkey. The 2 were captured in June. 8 other foreign nationals were released, along with more than 200 Ukrainians. Ukraine freed a pro-Kremlin Ukrainian politician and 55 Russian soldiers. President Biden and new British Prime Minister Liz Truss have pledged to work together to support Ukraine. The two held their first in-person meeting on the sidelines of the United Nations General Assembly. The two leaders said they would also discuss unresolved issues relating to post-Brexit trade and the Irish border. And Credit Suisse reportedly has drawn up plans to split its investment bank in 3. That's according to the Financial Times. The Times says the latest proposals call for an advisory business, a so-called bad bank to hold high-risk assets that will be wound down, and the rest of the business. Credit Suisse is trying to turn itself around after losses and scandals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
When the Fed makes its call,
a unanimous Fed raises the benchmark rate 75 basis points.
Bloomberg is there with live coverage.
We anticipate ongoing increases will be appropriate.
The market's responding to this, as you might expect.
And instant expert analysis.
Do we want this Fed to force a recession?
They are saying that forward guidance is dead. It is very not dead.
We keep being surprised at how durable inflation is.
The risk is skewed to doing too much.
They're choosing the lesser of two evils.
Nobody covers the Fed like Bloomberg, your global business authority.
Please answer with a simple yes or no. Does your bank have a policy against funding new oil and gas products? Mr. Diamond.
Absolutely not, and that would be the road to hell for America.
Yeah, that's fine. That's fine. Sir, you know what? Everybody that got relief from student loans has a bank account with your bank should probably take out their account and close their account.
I'm not sure that was the answer she was hoping for there, Lisa, in those hearings just yesterday.
That was gold. She was like, no, I'm not going to do that. Then she was like, everyone take their money out. But, you know, I get it. That's what this is all about, right?
You've got all the bank CEOs lined up. Only Jamie Dimon was the one who was willing to provide that answer.
Yeah, John, that's
Tom
true.
Just
you
tried
nailed
to finesse,
it. You nailed
tried to
This is
finesse
really
the message.
important. This is really important. He's the only one who steps up when it matters.
Shonali Bassett joins us now, Bloomberg Wall Street correspondent. Shonali, what did you make of that exchange yesterday?
Remember, Jamie Dimon was the first one this year to step up and say the U.S. needed a Marshall Plan for energy security. So this is about energy security. It's also about inflation worries. But remember, this is one of several sparring moments that he had with lawmakers about energy policy. He said the U.S. is really not getting this right. Other lawmakers, of course, took different stances on this. You had Kentucky's Andy Barr really urging the bank executives here to take a measured approach, not just to oil and gas, but to coal companies in particular. And the point that he made to Florida's Bill Posey was this, that investing in oil and gas can be good overall. He's made that point a couple of times before. What he's really worried about here is many countries moving to coal instead. So it's a complicated issue, obviously, different ideas across state lines. But remember, he's nowhere near the only one. When you look at JP Morgan's investors, they've taken a very similar approach, and lawmakers are split.
I sat on a stood, I should say. I've sat on a sidewalk in Davos, but this time I was standing on a sidewalk in Davos, and we had a raging debate about what big bankers should do to show what they do socially. And a very famous American banker said to me, American bankers have absolutely failed to sell what they do for the American public every day. From where you sit, have they failed?
It's a complicated one because from where they're sitting as well, remember, there are different issues for different folks here. Rashida Tlaib, what she's worried about is not just emissions. She's worried.
Oh, stop. She's worried about getting reelected.
And what she has been focusing on is the health of her communities, whereas Andy Barr is focusing on the jobs, the coal jobs in his communities. So, you know, if lawmakers can't get on the same page and guide the banks on where to go, it's very difficult for the banks and the investors to follow the rules.
John, remember when we talked to Brian Moynihan in Davos and we just said, we're not going to do Econ 101. We're actually going to talk about what they do. And Moynihan was freaking brilliant about the social contribution of Bank of America to America. I think these guys, including Mr. Diamond, are reticent to sell their value every day.
Some of those CEOs, Tom, are a little bit worried about regulation. I'd be thinking more so about Wells Fargo than perhaps.
Well, Wells Fargo, you don't put it. Yeah,
Bank of America.
I take your point.
Mr. Schaaf-Schnally may be a little bit hesitant to weigh in and join in with Jamie Dimon down in D.C.
Yeah, that is for sure. He said those regulatory problems would last for a long time, and he took a lot of heat, too, not just for those regulatory issues, but for shrinking, which is what we knew they would do in the wake of a lot of these regulatory issues and in a tough economic environment. So he was really chastised here for cutting jobs. But I have to say, on the social front, what's so interesting here is they were asked the cost of environmental, social, governance standards here, and Jamie Dimon also gave a more specific answer that it's the tens of millions now. It will be in the hundreds of millions later. And every bank CEO did agree that the cost is going up for these banks. So there is a cost. How much that cost will be, again, this is a global issue. Really quickly, really interesting here. Remember, these hearings have only happened since 2019. So there have been changes since these hearings have happened, but these committees may start to turn over quite a bit in the wake of the midterms. So some of the rhetoric that you're seeing today may be very different in just 6 months from now.
Well, Sonali, one thing that these big banks could do for the average person is raise the interest rate on deposits. You know, perhaps they can't do this, but why have they not? And this was a heated debate last night over the dinner table. Why are you still earning 0 on deposits if you see the 2-year yield at 4.1%? I mean, how much is that going to become an issue of scrutiny going forward?
It already is, and you saw them being asked this yesterday, and you see each bank CEO sit there and nod their head and say, yes, savings rates will go up. They didn't say how much. And remember, if you look at the national average, you're still looking at a 17 basis point return there on a savings account. So it's not a lot, to your point, but remember, these banks are sitting with more than $6 trillion in excess liquidity. That was in the hundreds of billions around 2008. And, you know, JP Morgan alone has that much in excess. So they have saved a lot of money. They're having this dual problem of having a lot of savings and having trouble lending into a tough environment. But to your point, that is the critical question here. The lawmakers were very angry that rates were going up and the banks were not passing it on.
We're so excited for an extra 10 basis points before the end of the year. Shnali, thank you. Shnali Vasek. Just unreal, Lisa, an extra 10 basis points anyway. We'll save that rant. There is a new scapegoat down in D.C. It's not the bank CEOs. It's Chairman Powell at the Federal Reserve. Right in the middle of that news conference,
Yeah,
Senator
I'm glad
Warren,
you brought that up.
and on Twitter, Chair Powell just announced another extreme interest rate hike while forecasting higher unemployment. I've been warning that Chair Powell's Fed would throw millions of Americans out of work, Tom, and I fear he's already on the path to doing so.
It's going to be interesting, and it goes back to Phillips Curve 101. Nobody's got a clue on this, John. I think everyone's flying blind on this, and I'm really glad you brought up Senator Warren's comments to Richard Clarida yesterday. I thought his answer was gracious and all, but, you know, we're trying to game out the parlor game here, and the toughest thing rather to game out is the job market. I'm looking at claims. I'm sorry, it's a fully employed America.
I won't try and game out anything. I'll just go by the calendar. Lisa, in early November, you get a Fed decision, and within a week, you get the midterms. And I just wonder what that final week of campaigning looks like if we get another 75 basis point interest rate hike.
So it's not really a good idea to game out anything, but right now it is the Fed's design to actually cause unemployment rates to go up, or at least to hike rates aggressively until they see the unemployment rate go up. And this is becoming an increasing political issue. We've seen the Fed have the support of politics, of politicians, for the first 9 months of the year, but that was when inflation was the first and foremost concern. Now, do we start talking about the dual mandate? Is this now the messaging heading into those midterm elections, considering that the Fed is telegraphing they're going to do what they have to do to bring down inflation?
The pain would be greater if we didn't. How do they communicate that
Well,
going into year end and into next year?
We saw this yesterday, basically saying unless you have a stable price outlook, you're not going to have a stable and strong labor market. They're trying to telegraph this, right? That unless you have prices at 2%, and I think Tom actually asked a really good question to the Adam Posen point, which is, does the world stop at 3% inflation? Why is 2% the inflation the target? How much is that going to become increasingly the question?
We're going to get you going, Tom.
Don't get me going.
I plan to in the next
I'm
10
off
minutes.
tomorrow.
So we can get them going all day.
Sabbatical.
Okay, futures unchanged on the S&P. Live from New York on this FX market. Ibrahim Rakbari of Citi joins us in just a moment. You don't want to miss that. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. all to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Equities just about positive. Live from New York, this is Bloomberg. We're up 0.1% on the S&P 500 after closing yesterday lower by 1.71%. Equities unchanged on the NASDAQ. The moves in the bond market just absolutely phenomenal. 12 months ago in the 20s, something like 21, 22 basis points on a 2-year, 4.1%. Tom, we've ended the era of sub-zero rates. The S&P across Europe, and the front end of the yield curve has to adjust big time.
There's an assumption, John, that we will all die or we'll all fail or we'll all that. And I don't buy it. I think zombie companies that have had a gift for X number of years will go under. But everybody else will, we lived it before. We'll move on and prosper.
Check out this chart, Tom, at 2s10s. Negative 57 basis points. You've got to go all the way back, all the way back to the 80s, Lisa, to see anything like this.
So the implication here is that this is going to be not only a recession, but does it sort of suggest the potential depth of one because of the work that the Fed has to do on the front end? Just shocking, some of these moves. It's really hard to get my head around. And I get your point, Tom. You're trying to throw shade at me. Some people are saying the world's going to collapse. I don't think that's the case.
No one's trying to. We love you.
It's okay. I love you both, but you can still throw shade.
Sometimes I'm not convinced.
Oh, come on.
I don't know. Sometimes you don't show us any love, but
If you could see the Bramo Chem folks on breaks, you'd know she doesn't love us. John, can we review sterling here before this meeting? John, sterling, 50 beeps, 75 beeps. Do we enjoy a 111?
Tom, I've got no idea. And that's the beauty of this BOE decision. If they went 100 with this currency rally or sell-off, I don't know.
We get lucky. We've got a guy named one of our bookers, Lee, that is so good. He called up Bank of Japan and he said, "Are you guys going to intervene? We want to book Abraham Rabari. Does it work out?" And of course, the bank said yes, they're going to intervene. And so we are gifted this morning with Ibrahim Rabari. He's global head of foreign exchange analysis at Citi. And Ibrahim, to great respect for all of you that do this day in and day out, I want to start with the monumental Rudiger Dornbusch at MIT in 1980. You and I have read the paper 5 times. Rudy Dornbusch invented it. A simple sentence: the essential complication arises from the link between balance of payments, money growth, depreciation, and inflation. Are we in a currency war, Mr. Rabari?
I would say it's great to be joining you on such a monumental day in the world of central banking and foreign exchange. And I do think we are in what people refer to as a reverse currency war. But the reason for that is, of course, because every central bank is competing with every other to bring inflation down quickly. And that's still the central message. I think the level of the exchange rate was a symptom, but the underlying illness is really very high inflation across the world. And that was what was creating, I think, the political pressure for the Ministry of Finance to intervene in Japan.
I did a fancy log chart today, Abraham, that we can't talk about on a Thursday, but it was a Plaza Accord, the log slope, etc. And the bottom line is we're nowhere near Plaza Accord dynamics. And yet so many people want somebody to save the day here. Who's going to save the day here in our present currency wars?
Well, I don't think there's anybody to save the day. I think you're right on point there. And in the end, it seems like the only currency that will sustainably win this currency war is the dollar. And that's, again, because in addition to inflation, the underlying dynamic globally is the scramble to find effective hedges in a world in which there are few places to hide in asset markets. And that's another reason why foreign exchange is in focus. It's not because of what's going on between interest rates and between countries. It's what's going on in markets more broadly, where both equities and bonds continue to be under pressure.
Ibrahim, this raises the question of when does something break? And we keep asking this because that's what some people think will be the circuit breaker to this whole system. We were speaking with Rich Clarity yesterday. He's looking to the rest of the world, probably going to be reflected. He didn't say this. This is me saying this. In the currency market, based on the fact that some of these currencies are trading like Bitcoin or like penny penny stocks. Where in the world are you looking for some sort of breakage, fissure, serious issue?
Well, the places to look are relatively well known. They tend to be in bank funding markets, and they, for the most part, still look very orderly. And that speaks to the lack of urgent concern around the world, and therefore the lack of a prospect for concerted intervention by the world's authorities to intervene. But it is the bank funding markets that would be the primary focus. In foreign exchange markets, the Ministry of Finance noted that there was some evidence of speculation. We don't think that there are particularly disorderly movements, even though liquidity has come down relative to normal times, but we simply aren't in normal times. We are drifting towards global recession, and we are in global bear markets.
So, Ibrahim, when we're talking about drifting towards certain levels or not disorderly, it brings me to the yen. We're talking about the potential for there to be some sort of cap at 145. Is that basically what the authorities over in Japan said overnight?
So I think they were signaling, and certainly there was some advance warning, and now we saw the actual intervention around 145. But I don't think we're speaking of a line in the sand, and that again speaks to the lack of control over those foreign exchange rate movements. We know historically for foreign exchange intervention to be effective, we need some combination of monetary policy to align with the FX moves and or concerted, that is, multilateral foreign exchange intervention. We don't see that coming. Therefore, we think we will probably see dollar yen above 145, right, and maybe 150 could end up being a more relevant level over time.
Mr. Babari, let me go all Stanley Fischer on you here. I just looked at Indian rupee, and I did a standard deviation study, and it's a 6 standard deviation pop from a -3 standard deviations, and this morning up to +3 standard deviations. Is the IMF ready for this? Do you have a confidence International Monetary Fund can pick 4, 5, 6 troubled entities and help?
So we are concerned, and we do think that we have these timely bank fund meetings in 2 weeks' time, where I think these discussions will be elevated. We do think that it's quite likely that they'll be quite busy in the years to come, as that combination of slowing growth and ever-tightening financial conditions probably will create quite a lot of pressure on countries that have seen, in particular, dollar-denominated debt rise quite sharply over the last decade, and those tend to be in the emerging markets.
I look, Ibrahim, at the moment, and let's bring it back to the majors and help us with the Bank of England. John, help me here. 23 minutes?
24 minutes.
24 minutes?
Sure.
Yeah, okay, we'll go with 23 minutes. Ibrahim Babari, how does sterling move off what we're going to see from the governor this morning? Mr. Farrell, I'm asking for a friend.
So we think the broader trend remains intact, more or less, as John said earlier, no matter what the Bank of England does. The Bank of England is between a rock and a hard place. Our house call is for a 50 basis point hike, so below market expectations. And in that case, it's very clear that we should see sterling weaken broadly, not just for cable, but also against the euro and other currencies. Should they hike by 75 basis points, we may see a knee-jerk positive reaction. But over the past year, whenever we saw a slight hawkish intervention by the Bank of England, that was an extremely short-lived blip. So we don't think it would be a trend changer. We still think cable will fall below 110 in the months to come. And even against currencies like the euro, we think that sterling will probably continue to weaken.
So, Ibrahim, right now everyone wants a stronger currency. Before they wanted a weaker one. Let's reflect on the previous currency war, the reverse of this one. Do you remember that line that came out of New Zealand that they were turning up to a gunfight with a pea shooter for the currency war? And I just wonder, Ibrahim, is there anything in the armory of these central banks that can actually achieve a stronger currency, given the global dynamics at the moment?
We don't think there's anything narrow or specific that central banks can do. If they can bolster growth, because that's at the heart, and if they can create a sustainable and solid financial backdrop, then we think investors are looking for safe places to hide. That's why not only is the dollar strong, but the Swiss franc is pretty strong as well. So if you can create that kind of environment, but when it comes to policy actions on the day, I don't think that the central banks that are under pressure have a whole lot to offer.
The flip side of everything that we've just been saying, Ibrahim, is the dollar and how much further it has to go to strengthen amid the sea of potential recession in the rest of the world. What's your view?
So we think quite significantly further. And again, the main driver of dollar strength is and continues to be this global bear market environment, the continued tightening of financial conditions. And we think that has quite a long way further to go and was reinforced by what the Fed projected just yesterday. So we think for the dollar index, we should see it go above 115. We should see a euro dollar below 95 cents. And I mentioned already sterling. And even for dollar yen, which we think is in that second category of secondary safe havens, if you like, we still think further upside is to come. And the turning point will be some combination of when we are on the other side of the global recession, if you like, and certainly at the time when the Fed looks to ease as opposed to tighten conditions.
And that might not be until the end of next year, maybe the year after that. Ibrahim Ragbari of Citi, at least that's what this Fed is trying to signal. Lisa, it's the last 10 years in reverse in so many ways, from QE to QT, from keeping rates at zero to taking them really, really high, from trying to get a weaker currency to trying to get a stronger one. And on that last point, it's so hard to achieve. Because as you know, and we've talked about this a million times, even if the Bank of England came out with 100 basis points of hikes in 20 minutes' time, you would have a divide on this program ahead of that decision as to whether that would lead to a stronger or a weaker currency for sterling over the next several weeks. And that is the conundrum, the dilemma for these central bankers.
Hiking into weakness, what no central banker wants to be doing, this whole stagflationary backdrop. You talk about how it's the past couple of decades in reverse, and I wonder how difficult it is for people to get their heads around that and to truly buy into that. And if there's sort of a stealth transitory that's been in markets and is getting beaten out of them with every CPI report, and whether the Fed is saying, as Rich Clarida emphasized yesterday, they're really serious. They're taking this seriously. They don't think it's just going to fade naturally in the same kind of way. It is a new environment that requires a new response. Has the market fully priced that